but that this could be the calm before the storm. In Washington, I'm Amy Morris, Bloomberg Radio.
Republicans on the House Oversight Committee are launching a probe into the Biden administration's releases from the Strategic Petroleum Reserve. Bloomberg government's Jack Fitzpatrick says they announced the probe into the drawdown in a letter to Energy Secretary Jennifer Granholm.
Now, this is something that Republicans had criticized, saying that those releases seemed to be politically motivated, especially the ones that have occurred in the lead up to the midterms, as it obviously benefits Democrats and the party in power to see gas prices go down.
Bloomberg government's Jack Fitzpatrick reports Republicans are also asking for information about a potential fuel export ban. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy Lyons, thank you so much. Nancy Lyons in our Washington, D.C. newsroom and bureau. We're going to head back to D.C. shortly for a great Bloomberg Big Take story. Has to do about middle-class wealth. We are definitely seeing changing times. In the meantime, speaking of wealth...
yeah, Mark Zuckerberg. I don't know if you guys have seen, Carol, you've talked about it. We heard this from Creedy just now, too. Meta Platforms, we covered it after the bell yesterday. The stock is just taking a huge hit today. And as a result of that, Mark Zuckerberg, than he was, well, yesterday, but also about a year ago. It's okay.
It was
He's going to be okay.
It was $142 billion in September of 2021.
It was?
Yeah.
But...
I mean, are we going to have to sit down with the accountants? A little counseling? I'm sorry. I know we're having fun.
I did tweet this.
Perspective, everybody.
One of our former colleagues got in touch and replied to me on Twitter with a violin.
Was it small?
Just
really
a tiny
small?
violin, yeah, an emoji of a tiny violin.
I mean, this is how it works. I mean, a lot of these billionaires, a lot of their wealth is certainly in the companies they either founded or continue to run, if you will. We're having some fun, but it does speak to Meta. Big pivot, Facebook to Meta. Are investors buying in? They haven't been, and that is certainly impacting wealth of a lot of investors, including the owner of the company and co-founder of the company.
The word that Mark Zuckerberg would use, as he did last night, is patience, and we're going to talk about that with Sarah Fryer in just a few minutes.
Patience. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just about the lows of the day on the S&P 500 index, down now by 17 points, drop there of 0.5%. The Dow holding on to a 264-point gain, up by 0.8%. NASDAQ lower as well, down by 169 points, a decline of 1.5%. 10-year yield 3.95%. The 2-year 4.33%. Spot gold down 0.3%, $16.59 the ounce. While West Texas Intermediate crude oil is up 1.3%, $89.07 a barrel. Wall Street's dealing with another session of unnerving twists and turns as investors mull the Federal Reserve's path of interest rate hikes while assessing mixed economic data and earnings reports from major companies. Case in point, Meta platform shares, they're plunging now by 23.75%. All of this ahead of earnings after the bell from Apple and Amazon and Intel. Right now we've got Apple down 3.4%, Amazon down 4.9%, Intel is slumping by 3.3%. We've got complete coverage as those big tech names report after the bell. Spot gold down 0.3%, $16.60 the ounce, and West Texas Intermediate crude oil advancing 1.4%, $89.12 a barrel. Recapping and repeating, we've got the 10-year under 4%, 3.95%, S&P down 15, drop there of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Man, we can't say it enough because it really is just such a standout. Charlie talking about it. Meta Platforms shareholders paying dearly for its spending on the metaverse. Facebook parent, the market value collapsing at least by one count, almost $700 billion this year, forcing it out of the ranks of the world's 20 largest companies. You and I keep checking out the chart. Mark Zuckerberg's fortune, we just talked about it. We had some fun, but nonetheless, it's real money, plunging by some $11 billion today alone.
Just today, more than $100 billion since September of last year. In fact, Meta platform stock trading right now at levels last seen, Carol, back in 2016. We've got the perfect guest to give us everything we need to know in our audience, what they need to know about Meta platforms and what it does from here on out. We got Sarah Fryer with us. She's big tech team leader for Bloomberg News. She's also the author of the great book. It's called No Filter, The Inside Story of Instagram. She's in our Bloomberg 960 studio in San Francisco. Sarah, I know you worked late into the night last night with the live blog and with the team covering Meta Platforms' most recent earnings report. One thing that sticks out to me from that and Mark Zuckerberg's comments, the word patience, which I heard him utter a couple of times. It doesn't seem like investors are very patient.
No, it doesn't. It seems like every question he was getting on the earnings call was are you sure that this is what you want to do with all of this money? And how can we as investors know that these bets that you are making are actually going to pay off? And how soon will they pay off? And Zuckerberg, he was steadfast in saying, listen, I like the trends I'm seeing in terms of, the progress we're making. We're making progress. I can't tell you when or how big or how much will come out of this. And I think that was really not what investors wanted to hear. They wanted to hear, okay, you'll see payoff in 2 years or 5 years or something, but he couldn't make those guarantees. And that's what we're seeing reflected in the stock. It's this enormous bet, and it's a really hard time for Meta to be making a bet of this scale, given the economic environment, given the change that they're making to their entire algorithm, big changes to their legacy social platforms, so much in flux at once.
Sarah, it's interesting. We had a guest just before Meta's earnings last night, Linda Yates. She's created this company called Mach 49, and she's talking about, she's got a book out called The Unicorn Within, and basically how established companies have to essentially disrupt themselves and create unicorns within their own company rather than rely on buying kind of a smaller startup. And it was funny to be talking with her and digesting Meta's earnings last night. I mean, could it be that ultimately, yeah, these are companies that have to pivot because the world is changing, and this could turn out to be a really smart bet on the part of Mark Zuckerberg? I mean, how do you think about it? You've been reporting on this company and writing about it for such a long time.
Well, here's the thing. This is not a new bet by Zuckerberg. He changed the company name a year ago to Meta, but he acquired Oculus in 2014. This is something he's been saying is a 5 to 10 years out vision for more than almost 10 years in itself. So I think that lends itself a little bit to the impatience. But to your point, I think it's really important to think about the context of Meta's decision here. Mark Zuckerberg knows he can't go acquire another Instagram, acquire another WhatsApp in order to dig out of this hole and bet on the future. He needs to build it within Facebook, within Meta, and he doesn't really have a track record yet of inventing things, and that's really something that investors are grappling with here. Like he invented Facebook, and then the news feed, I guess, is another major great invention for the advertising business. But other times he's tried to build things that are appealing to consumers. It's only worked part of the time, sometimes hasn't worked at all. Think about how many times he tried to clone Snapchat, how many times he's tried to clone TikTok before it worked out. So I think that is the hesitation here. You know, he's taking the company on this big pivot. He's turning a ship of, tens of thousands of employees in this direction. Can he pull it off? Well, it's hard to say. They're making a lot of innovations, but do people want them? Is the question.
Okay, so that's the question, and I believe it was Connor Sen, who's on our Bloomberg Opinion team. He was tweeting about this a little earlier today. I'll pull up the tweet and tweet it out after our interview, Sarah. But he basically said the idea that he's wondering if Mark Zuckerberg has had people around him who are reflecting what customers want right now. And I'm wondering what your reporting and the team's reporting can tell you about people close to him, his advisors, and where he's getting the idea that this is where they need to really bet on this.
I think that he has a lot of regrets about the fact that Meta built its entire business on the platforms that were created by Apple and Google, the phone, right? And we are seeing how risky that is with Apple's privacy changes wiping $10 billion off of Meta's revenue this year. So from a business perspective, he needs to own the next major computing platform, because if he doesn't, he will always be thinking, what is Google going to do? What is Apple going to do to ruin my business next year? Or what could they take away from me? It's just not a very, very safe strategic place for the business to be long term. So he's right about that. However, is the metaverse the next major computing platform? He thinks it is. Who knows?
Yeah, exactly. Oh my gosh. Well, investors today voting, we don't think so. Meta Platform still down almost 24%. Sarah Fryer, thank you so much. Bloomberg News big tech team leader. She's written so much, including the inside story of Instagram. She knows this company.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week.
Jinx.
Thursday,
I know.
Carol. It's not Friday yet, okay?
I have to say, one of the conversations we keep having in the newsroom in and around is just how heavy everything is, the news flow. And I keep thinking about, for kids still coming off the pandemic, the impact that all of that has had on them.
We're going to do our weekly check-in with the Johns Hopkins Bloomberg School of Public Health in just a few minutes and talk to Dr. Tamar Mendelsohn all about the Center for Adolescent Health there and what's going on with kids and what we need to keep an eye on. First up, though, Charlie Pellet, let's get an update because we got less than 90 minutes to go.
Indeed, and to Carol's points, Tim, another day of fast-moving developments. Let me begin with what happened last night with Meta. We'll move forward from with earnings from there. But first of all, Meta Platforms updating that stock just about the low of the day right now, down 24.1%. All about last night's earnings report. Very disappointing for many investors. After the close of trading today, of course, we'll be hearing from Apple, Amazon, and Intel. Shares of all three tech giants are moving lower. On the plus side, after earnings, Caterpillar shares, they are rallying, lifting the Dow, pushing the Dow higher, up by 8.1%. Also after earnings, we've got McDonald's shares up 3.4%. AutoNation reported this morning, giving us a glimpse into the health of the used car market, up 4.41%, and shares of MasterCard down by 0.7%. So the Dow higher by 277, up 0.8%. We've got the S&P down 15, down 0.4, very close to session lows. NASDAQ being weighed down by Meta. We've got NASDAQ down 1.5%. So Wall Street dealing with another session of unnerving twists and turns. Today, the European Central Bank doubled its key interest rate to the highest in more than a decade. Here's ECB President Christine Lagarde, whose remarks were carried live on Bloomberg Radio.
Economic activity in the euro area is likely to have slowed significantly in the third quarter of the year, and we expect a further weakening in the remainder of this year and the beginning of next year.
Policymakers in Frankfurt delivered a second straight three-quarter point hike today. Credit Suisse plunging by the most ever after a radical reboot disappointed. Credit Suisse Group reported its fourth straight loss as the investment bank continues to struggle. CS Credit Suisse down now by 18.7%. Recapping, we've got the 10-year yielding 3.95%. S&P lower now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Appreciate that update. Well, remember the study that was all over the news earlier in the week about how kids who played 3 hours or more of video games a day performed better on tests of memory and impulse control than those who did not play games? This was a study that was released on Money. It's some food for thought, and I feel like, Tim...
Was this study by kids who play video games? Is that who did this study?
Funny. That's very funny.
It seems like it.
I just think about all the things that are coming at kids right now, and, things that, okay, maybe that's some upside, but there's a lot of things that have been tough when it comes to their mental health, especially coming off the pandemic.
Yeah, and we go to Dr. Tamar Mendelsohn, Director of the Center for Adolescent Health at the Johns Hopkins at Bloomberg School of Public Health. Dr. Mendelsohn joins us on the phone from Baltimore this afternoon. The Johns Hopkins Bloomberg School of Public Health that is supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Mendelsohn, we wanted to talk to you because you're an expert when it comes to adolescent mental health, when it comes to child mental health as well. And coming off the pandemic and just seeing the way that kids' mental health was affected, given that here we are, still more than 3 years in and COVID hasn't gone away, what are the right things for us to be focused on and keeping an eye on to make sure that we can actually undo some of the damage done over the last few years?
Absolutely. Well, first, thanks for having me on. And I feel like I always want to stress that youth mental health issues were a public health problem even before COVID. And I think it's important for us to know that because the pandemic really shone a spotlight on these mental health issues, and certainly they have been made worse during the pandemic. So I think this is a wake-up call for us to really think about how can we build in more supports for young people throughout their development so that we can really help promote wellness. And schools are one important place to do that. So states are starting to pass new policies to better support young people's mental health. And this includes being able to include mental health days where students can be absent from school for a few days without penalty for mental health reasons, funds to cover psychologists and other mental health professionals on site in schools, and also training teachers how to recognize trauma and how to respond in an effective way when they see youth trauma in the classroom.
So I do wonder, though, as you talk about this, schools are struggling just to make sure kids have all the necessary equipment that they need. Not all schools are created equal. And I feel like we continue to load so much on schools to take care of a lot when it comes to our younger generation. Doesn't that worry you a little bit about the inequities as a result, and kids who maybe need some help when it comes to mental health in lower economic areas, and that they might not get that?
So you're making such great points. So first, I really want to underscore what you said about inequities. The pandemic really worsened pre-existing inequities. And so what we've seen is that children growing up in low-income communities, under-resourced communities, were hit particularly hard by the pandemic and tend to experience more sort of trauma and stress. And this is especially true for Black and Native American communities. So I think we need to make sure that we are funneling resources toward young people who need them most. And then, the point about schools do have a lot, they have a lot to take care of, right? And they need to really make sure that students' academics are supported and all of those things. But schools are where our young people spend most of their time. And so I think it's really key that we build these mental health and emotional supports into the way that we educate young people. And this can be done without sacrificing academic rigor or, education. So there are many sort of prevention programs and mental health promotion programs, restorative justice programs that can really be embedded within schools to create a more supportive culture. And what we know from research is that school connectedness and feeling like you belong at school and you're supported and valued, that is actually a really strong protective factor for young people's mental health.
I totally agree, right? The payoff, you think about it, right, Tim?
Yeah.
Making sure of that.
Yeah, Dr. Tamar Mendelson, really appreciate you taking the time and joining us this afternoon. Dr. Mendelson is director of the Center for Adolescent Health at the Johns Hopkins Bloomberg School of Public Health, joining us this afternoon from Baltimore. Dr. Mendelson, the Johns Hopkins Bloomberg School of Public Health, I should note, it is supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies.
Did you play video games a lot as a kid?
It's funny. I actually watched, I was never good at video games. I was talking to a colleague about this today who plays games. I like to watch my friends play games, which is kind of funny because,
well, there's tournaments where people
nowadays
do that.
there is. Like, Twitch is huge. Esports leagues are huge.
Right.
So, Carol, I was onto something.
What was the game you were watching?
GoldenEye. Ari knows what I'm talking about. Yeah.
He's like, thumbs up.
So.
I'm like a Pong.
Yeah.
Go back. It's scary. All right, let's get back to world and national news. Over to Nancy Lyons. She's in our 99.1 newsroom in Washington. Hey, Nance.
Thanks, Carol. President Biden is honing in on an economic message as his final pitch to midterm voters. He is in Syracuse this afternoon touting a big investment from Micron Technologies. He'll be in Philadelphia tomorrow to try to shore up a tough Senate race for John Fetterman. Greg Valliere at AGF Investments says the political ground has shifted a bit for Democrats.
Polls show that crime has surged as a big issue. Polls show that abortion is not as big an issue as we thought it might be. Polls also show Hispanic voters are moving to the Republicans.
AGF's Greg Valliere tells Bloomberg he has Democrats losing 17 seats in the House, but he says that may shift in his forecast to the 20s. In this midterm election cycle, Facebook and Instagram are running millions of dollars in partisan ads that look like they come from local media outlets.
A report from the media watchdog NewsGuard calls them pink slime newsrooms. It says both left and right-leaning groups rely on the tactic in midterm battleground states, and they've spent close to $4 million on ads on both Meta platforms so far this year. The report says the advertisements have been featured more than 115 million times. NewsGuard calls it a new kind of political dark money. In Washington, I'm Nathan Hager, Bloomberg Radio.
Americans expect to spend more money on Christmas gifts this year. Those Those surveyed in a new poll from Gallup anticipate they'll shell out $932, marking a nearly $100 increase from last year. Pollsters found 37% of Americans plan to spend at least $1,000 on Christmas gifts. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So, landing a rental is harder than getting a new job. Charlie Pellet came up from where he does all his work and reporting. It's on another floor.
Okay, I'm like, where did he come from? Brooklyn, Queens.
Came out in the newsroom. He's like, hey, did you guys see this story that landing a rental is harder than getting a new job?
Oh, that's cool. It's written by our friend Charlie Wells, who writes a lot about personal
finance. But Charlie
finance.
Pellet came up into the newsroom.
Yeah, so it's like the story has Charlie's all over it. Totally. Okay. So Charlie Wells writes that finding a new place to rent has never been a picnic, but for a third of renters who moved into their properties in the past 2 years, the process was harder than getting a job. This according to a new study from Zillow.
Gosh, the findings coming at a time when unemployment still sits at a 5-decade low, even as some industries are seeing an uptick in layoffs. And while surging rent prices are finally starting to slow, they remain elevated in many parts of the country. Rising home prices during the pandemic shut many potential buyers out of the housing market, which then, of course, helped push rents to record highs in cities all the way from New York City to Austin, Texas.
Okay, here's how we're talking here for renting, okay? The median one-bedroom rent this month was $3,860 a month in New York. That's a one-bedroom. Okay.
Not a mortgage payment, folks. Rent.
Exactly. $3,060 in Boston and $2,500 in Miami. That's according to a recent report on metropolitan areas from Zumper. It's a rental listings company. We are starting to see, Carol, rents falling in some places. Many respondents in Zillow's poll said they felt compelled to offer more than renters might in less frenzied moments.
Yeah, so here's what's going on. Some 30% said paying at least 2 months' rent in advance helped them secure their latest places, and nearly a quarter said signing longer leases helped them get their current units. Man, just stuff shifting around.
Yeah.
What?
I want to see what happens to, the sales market. Because
you want to buy a place.
Yeah, but I mean,
Did I say that low enough?
It does also seem, what's happening. And also, everyone should check out the new Oddbots podcast because it's all about what's going on in the mortgage market right now.
We've definitely seen the impact of higher rates, and housing is something, and shelter costs are something we've been watching very closely. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow higher, S&P, NASDAQ both lower. 10-year yield below 4%, 3.94%. The 2-year, 4.32%. Wall Street dealing with another session of unnerving twists and turns as investors mull the Federal Reserve's path of interest rate increases while assessing mixed economic data and earnings reports from major companies. Got to begin with Meta Platforms. Yes, it reported last night, but today the stock is now down by 24.4%. That sets the stage for Apple to report after the close of trading. Apple down now by 3.3%. Amazon also reporting after the close, down 4.1%. We'll hear from Intel as well, down by 2.7%. So 3 major big tech names. We've got special coverage for you coming up when those earnings break. Right now, spot gold is down $5 the ounce, down 0.3%, $16.59 the ounce. West Texas Intermediate crude up 1.2%, $88.95 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, along with Tim Stenovec, we're live in our Bloomberg Interactive Brokers studio, streaming on YouTube. Charlie breaking down the markets here. It's been an interesting week, chock full of so much, the big tech earnings, and we've really got a big tech data dump, earnings dump after the close.
Bonanza is, I think, one word we could use for it.
Yes.
Okay, so we got a chip maker. We got Intel reporting.
Yeah.
In addition to that, we also got Amazon, which is going to be really interesting to see AWS revenues, given what we heard earlier this week from Microsoft about a slowdown. Microsoft's the number 2 player when it comes to cloud. Amazon's the OG when it comes to cloud.
Yeah.
So any commentary about that? And then we got, of course, Apple, Carol. And do you want to know what I'm looking for Apple, or do you want to talk about our next story?
No, let's talk Apple.
Okay, let's talk Apple a little
because
bit.
you and I were going through the numbers, and we're like, first of all, anytime Apple comes out, I feel like even when there's a disappointment, it's just they sell so much stuff.
They do, and this year is a little different because when they introduced the new iPhone, instead of introducing it at the end of September, they introduced it and started selling it in the middle of September. So there are a couple extra weeks, which could make a big dent there in a good way.
Did you buy a new phone?
No, I have a 13, which is, what do you have?
12?
Yeah, okay.
I'm thinking next
year?
Yeah.
And you're going to get a new watch too, right?
I don't even want to tell you.
Your watch is like the original watch.
It's not the number 1, but it's the number 2 version.
Yeah, so, okay. I don't have the Apple Watch, but I get it.
Yeah.
But the China story too.
Yes.
Greater China accounts for the third biggest in terms of where geographically revenue comes from after the Americas and Europe.
Right.
So what's it seeing in China from a demand standpoint, but also from a production standpoint?
Right, which is so crucial too. We know it. The supply chain, Apple, so embedded when it comes to China specifically, Chinese economy as well. And it is always this kind of thing. China needs Apple, it seems like, right? It's been really important in terms of developing its economy, putting workers to work, and helping it build out kind of its manufacturing base, even though they want to move on.
Okay, so our weekend show we have coming up on Saturday morning.
Yep.
And we feature an interview.
Great. Like, cozy up in your jammies, grab a cup of coffee, 8 a.m.
You can also download it as a podcast, which a lot of people do.
Get on your bike.
And Andy Brown, our interview with Andy Brown from earlier this week, I believe it was Monday, is featured in that. And I've just been thinking a lot about that since then, because I do wonder, a company that is so intertwined with the supply chain in China, what does it do in an environment like this?
Well, I think it's a really good question. And, Andy's kind of net, I felt like, in the end, was that China doesn't want its economy to shut down completely.
Yeah.
Right? That it understands, that would be massive implications, even though based on what we got almost a week ago in terms of President Xi really solidifying his position solely alone at the top of the party there in China, like, it's going to be different going forward, but he seems comfortable with it.
The last thing I'll say is Pinterest, because we got Pinterest earnings after the bell as well.
Why? Why did you say that?
Because we got Pinterest, we got Intel, we got Apple.
Okay.
Yeah, that's why.
Yeah, we got a lot. T-Mobile, I think, too.
That's right.
All right, let's get to it also, because I feel like a story that so speaks to whether it's earnings, the macroeconomy, the markets, is the Bloomberg Big Take. It's also most read about the once-in-a-generation wealth boom ending for America's middle class. So lucky for us, we have Peggy Collins. She's Bloomberg News Washington Bureau Chief, and she joins us from our 99.1 Bureau and studio in Washington, D.C. Peggy, so good to have you here with Tim and myself. Tell us about what's going on. This is a great story, and so much plays to what's going on today.
That's right, Carol. It was a team effort. We did a lot of reporting over the last few weeks around the middle class. Of course, they are the large chunk of consumers, so the drivers of the economy, but also heading into the midterm election, they tend to be a group that really does tend to come out to the polls. So we wanted to get a sense of where they stand. And what we found by crunching the data is that the middle class has actually seen one of the biggest wealth booms that they've had, and certainly from this generation, but it is starting to come to an end for two main reasons. As we know very well from reporting across Bloomberg, stocks are really coming off their highs. That's hitting retirement savings. And the other is housing. Housing has really been hit by this fight against inflation, with the 30-year mortgage bond now getting close to 7%. So those two things have really changed the dynamic for the middle class household.
I wonder, Peggy, if you were to choose one thing that could be tougher, would it be inflation or would it be rising rates? Because they're related to one another to the extent that we need to raise rates in order to tamp down inflation. But, you could do a read of understanding that the middle class is wealthier than it's ever been, thanks to a decade of cheap money. But at the same time, higher prices are eroding that wealth.
That's absolutely right. And when you think about consumer sentiment, to your question, I think what's hitting the middle class family and household most is the grocery bills, the gas prices. People are just really feeling it and seeing it in their everyday life. But also what's happening is that a lot of the housing wealth, which is really tied to the overall wealth of the middle class that we've seen people benefit from because of low rates, that's starting to head in the other direction. And housing is a more illiquid asset, right? So when you're thinking about sentiment of consumers, that's really where inflation is hitting sooner and faster and harder.
Well, and I do think, I'm really glad that you guys dug into this story, Peggy, because I do think about, the conversations we're having in the newsroom, at home, about the upcoming midterms and what could be the implications, and trying to assess, ultimately, when people go to the polls, we've talked about, right, in the past, it's the economy, stupid, like what's going to ultimately matter when there's so much division over some of the more, some of the social issues in our country.
That's right, Carolyn. What we found from the reporting here is that, on average, is that Republicans are feeling even more sour about the economy than Democrats, but that even some Democrats are really feeling, when they look ahead, that the economic outlook is turning. So I think we are seeing this hit from inflation and the fight against inflation starting to turn consumer sentiment. And of course, the middle class is sitting right in the middle of that sentiment piece, hit both sides of the aisle. And I do think that's going to be a key to the election. But of course, we have a lot of other issues that people are thinking about when they go there, which is why we have so many close races right now where we don't really know how it's going to turn out.
But is it true that, and I know this is not a politics story, but it is framed ahead of midterm elections, that the economy is front and center for most people? I mean, this is the issue that people vote on?
We are still seeing in a lot of polls and a lot of people that we're talking to that economy is one of the key issues. There's no doubt about it, because it's really been rattling so many households. As we were just talking about, it's changed so dramatically.
What I find so interesting, Peggy, is that yes, we are feeling squeezed in a lot of places. You mentioned groceries, you mentioned gas. We're seeing inflation everywhere. I know I certainly am. $5.99 for a half gallon of milk last night. I mean, that's a lot. That's a half gallon, not a gallon. Okay, that's a lot of money.
So $12 for a gallon of milk, essentially.
Yeah, if I would have bought, but I bought one half gallon. I mean, that's crazy.
Yeah, it's nuts.
So Peggy, if we're thinking about it in that context, then how does this portend for 2023? And we only have about 15 seconds left.
Well, I just will say the one thing we don't understand well and are still trying to figure out is how much of that pandemic savings cushion is still out there. Yeah. So yes, we're feeling it in the short term with inflation, but the question is, how much do people really still have in their back pocket, literally and figuratively?
Yeah, and the data shows that people still are out there spending. All right, Peggy, thank you. Peggy Collins, she's Washington Bureau Chief at Bloomberg News from our 99.1 studio in the nation's capital. We're talking markets with our TV colleagues in just a moment.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. We together, of course, go cross-platform, whether you're on TV, radio, YouTube, whether you're on Quick Take, you are watching and you are looking at a tech market that is once again under pressure, Carol.
Yeah, absolutely, right? And we're going to be watching it again after the closing bell because of some big tech earnings. I'm looking at kind of old tech, I guess you could call it, Caterpillar. I am blown away by the outperformance, especially as we think about, you know, the future, new technology. Well, this is a company that's been around for a long time, up 8%. Do you know it is up 31% since the end of September, and we're seeing the biggest move in about 2 years. Its best post-earnings stock boom in decades, and this is after that strong quarterly report and its upbeat outlook. I just think about, you're not going to spend money on their equipment, millions of dollars, thousands of dollars, hundreds of thousands of dollars, unless you feel good about the outlook.
I thought you were going to say you're not going to spend money on their equipment if you're building something in the metaverse.
Oh, there is that. No,
okay.
You don't need it.
Well, I do want to take a closer look at industrials because Caterpillar is helping push industrials into the best performing sector in the S&P 500. This is the S&P Industrials Index, led higher by Caterpillar, of course, as Carol just mentioned. But Honeywell, after the guidance it gave, beat the average analyst estimate. It's higher right now by 1.4%.
Someone somewhere is doing well in this market, but not if you're long tech on this day, where S&P 500 is up 0.4%. The Dow does well on the back of some of these older school names. We're up 0.9%, but the Nasdaq really under pressure once again, off by basically 1.5%. That's 160 points to the downside. Thank you, Meta. Russell 2000 is clinging on to the green. We're up 0.5 percentage point again, Taylor.
Feels 50-50 on a sector level, but there is sort of a tilt to sort of a classic risk on trade. If you think about the industrials, as Romain and Tim have been talking about Caterpillar, that sector's leading 1.5%. You're also getting financials and energy in there as well. Romain, I'm a broken record. It is the story of yesterday and it is the story of today. Technology clearly to the downside. You're off 4% on that sector within the S&P 500.
Yeah, NASDAQ 100 down 31% on a year-to-date basis, and a lot of the big names dragging it down. Meta Platforms down 25% here on the day. An interesting note out by the folks over at UBS Global Wealth Management, basically saying that valuations in that big cap tech space still too high. Going to get those Apple earnings after the bell. The share is down 3% down for a second day here. Going to get Amazon as well and a few other secondary names. And then we talk about all the issues going on, Carol, with what's going on with Meta Platforms. The idea that this isn't just a fundamental story. This is a leadership and a management story. That's also the story of Credit Suisse. We have, of course, the European shares up there on our screen right now, which closed down 19% here on the day, as there are a lot of questions here about that leadership going forward.
A lot of plummeting, a lot of tumbling around those two names. Let's delve into the Meta one, because we've only ever seen one other declining sales growth for this company, and it was the last quarter. For 2 straight quarters now, we have had a decline in revenue, and it's only going to get worse as they, of course, gave us some lackluster forecasts going forward. A company that continues to drive up its expenses. In 2023, it's going to be $96 to $101 billion. And this is why we see a tumbling in the price to earnings ratio. In the graph below, I'm looking at for the radio audience, showing a chart not only of sales on the decline, but a PE ratio, a valuation of this company that disintegrates and, of course, wipes off about $100 billion, well, from one Mark Zuckerberg.
Yeah, a really shocking, report from the company. We're seeing it playing out in the share price. That's a very telling chart, Caroline. And I do feel like we are in this environment where we get these mixed corporate earnings, right? Some outperformance, some not. When it comes to the economic reports, even the data points today, again, mixed views. Weighing in, though, specifically on that, we're trying to make sense of it. What does it all mean? Cecilia Rouse, she's chair of the U.S. Council of Economic Advisors, earlier on Bloomberg TV. And dare I say, is she talking about potentially a Goldilocks economy? Check it out.
Overall, what this report tells us is that the economy remains robust, it remains resilient, even as we're starting to see the kinds of cooling that I believe the Fed is looking for.
And of course, that's Cecilia Rouse. But going back to, I was talking about Caterpillar, a great macroeconomic indicator. And then you have to put that against something like Meta, which we know is doing a huge pivot in terms of its business. It could turn out to be a smart bet going forward. But as investors,
it could.
Well, couldn't it? It might.
This is the optimism that we love to score, Carol, because no one else in the market right now is optimistic about this. And when you talk about the demand...
It's just Mark Zuckerberg. That's it.
What's that?
It's just Mark Zuckerberg.
Would you have thought Facebook years ago when he was creating it in his dorm room that it was going to become this huge company? Like, who would have thunk, right?
Well, the idea that lightning can strike twice on that, I think, is certainly a big question right now. And
Apple
we had an
was
interesting
down in the
discussion.
dumps at 1.2, and look at how it roared back.
Yeah, well, Apple hasn't necessarily had the same issues that Meta and previously Facebook had been going through. And I bring that up because when we focus so much on what's going on with this pivot to the metaverse. Look, if he had never pivoted, if this company was still FB Facebook, it would still probably most likely be around $100 a share because the issues that are plaguing this company have nothing to do with the metaverse. They have to do with a lot of the ad space, and a lot of that does, as Caroline is alluding to, leading back to Apple and the IDFA changes.
Yeah, the changes that Apple made over the last year. But, you know, and I asked Sarah Fryer about this specifically, Caroline, and she said the reason you see this happening with Mark Zuckerberg and with Meta Platforms is they don't want to be reliant on any single platform like they were too reliant when it came to Apple. So if they build out their own universe, but again, the problem is that Zuckerberg cannot make guarantees to when investors will start to see payoffs from the billions of dollars.
They tried to go the hardware route, and that didn't really gain any traction. And now the metaverse, I don't know what category you put that in, but it's kind of the same idea. Build your own sort of universe, your own sort of space, and you can control it.
And subsidize it. And I think that's also what's being played, that some of the very expensive hardware that they did create, they subsidized and perhaps lured us into a false sense of security.
Are you in the metaverse, Tim?
It's a good question.
He's in real life. He's in crypto in real life.
I mean, I'm not joking. I really like cycling, and I use a platform called Zwift, but I'm not wearing goggles, right? It's like more a game. And
you look
a
ridiculous
smart trainer.
Things, right?
I do. Hey, we actually got a pretty fun segment about this coming up.
I have to say, sports is the one area in which it's working. The amount of sweat that my husband is giving off when he is doing boxing in the metaverse, he enjoys it. But that is one small use case at the moment.
Does he do this in the living room?
Yes, he does. And I video him, and he looks ridiculous.
No, gaming too, right? We've had a CEO of a company talking about that.
I do think it's interesting that, Romain, you sort of bring up corporate governance here, because at the moment they are completely still very much dependent on one advertising trick pony. They're also very dependent on one individual at one particular board level. And at the moment, there'll be questions about a corporate governance and an ability to reason as to whether this is the right pivot or not.
And I think Tim's alluding to a lot, and Tim, correct me if I'm wrong, I don't want to put words in your mouth, but the way that we're thinking about Amazon, which for so long was investing, using a lot of the AWS profits to invest into becoming more of a logistics company. Eventually you start to see payoffs. So
diversification, Taylor. Where is that in Facebook right now? And what does the metaverse become? Is it just the same consolidated sort of ad platform that they had with Facebook and Instagram?
But we also are not even bringing Apple into this, and we know that the company is working on some sort of augmented and mixed reality. And you know, Apple's never been first to developing something. They didn't develop the first tablet or the first smartphone, but many people would say they did it in the best way. So we can't, have this conversation without talking Apple.
You know, you just wait till we're all living in the metaverse because we can't go outside.
Okay, I'm going to stay on the outside looking in.
Yeah, we'll see. We'll see if it's too
you
hot.
guys, you can
throw stones
go in the
Romain.
biodome like Pauly Shore and figure out whatever's going on.
You never know. Right. We'll see what's going on.
That's a reference for everyone over 50.
I know the reference program.
Oh my God! All right, we're gonna come back. I think. I don't know.
I don't know. Is Carol coming back?
I don't. Are you gonna go to the metaverse maybe and not come back?
We can meet there together. How about that? We can have drinks there.
You can spa in the way that you do. And
yeah, I think we got to go here.
We got to go. We'll be back.
We've got a whole nother show.
I know. We do too. We got stuff. People waiting for us. We're gonna be back in less than an hour's time. Radio, TV, YouTube, and Bloomberg Quick Take. We will count you down to the closing bell on this.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you're listening and watching Bloomberg Business Week. Really, folks, we do love each other.
Tough crowd, Carol.
It's like that, Thanksgiving dinner.
That's what makes it
fun. Some of those relatives, you're like, yeah.
You got to be ready to. That's why we need to practice boxing in the metaverse.
All I'm going to say is Sarah Fryer said, they can't buy another Instagram. They can't buy their way necessarily out of it. So they've got to innovate.
They tried with Snap, right?
Yeah.
And then they copied Snap instead. Copied TikTok.
I mean, I'm as much a skeptic as, but I don't know. Like, companies have to disrupt themselves because things are changing.
This is what we talked about yesterday,
right? With
the unicorn within,
right? And if we're critical that maybe the ad model, there's too much competition, that this isn't the way forward for companies to continue to exist, then you have to think of a different model, right? I know.
Look at Google; they've diversified a lot.
I'm not saying I'm all in on metaverse, but what if?
I know you're not in.
He's on a different plane, Mark Zuckerberg, right? Like he's brilliant.
We're going to have much more on this throughout the program today. Let's get on to Washington, D.C. now, to world and national news. Nancy Lyons in our 99.1 studio. Hey, Nance.
Thanks, Tim. The Biden administration is touting the latest GDP report as proof the economic recovery is still robust, but admitting it is showing signs of cooling. Cecilia Rouse is the chair of the Council of Economic Advisors.
There is continued resilience in consumer spending, but it did ease. So that is consistent with what the Fed is trying to do. We also saw that businesses continue to invest, but again, that is slowing as the Fed, as we would hope. The big drag on the GDP last quarter was in housing investment. Again, that's the sector that we would think would be most sensitive and susceptible to the rate increases.
Rouse tells Bloomberg it is important to note it's an unusual economy following a jolt from a pandemic. The midterms are just around the corner, and it's become commonplace for candidates to claim their election loss resulted from fraudulent voting or vote counting, a dilemma as well as a danger for local elections officials.
Local election workers have banded together in a nonpartisan committee for safe and secure elections to compare notes on election procedures and on convincing the public about them. Derek Bowens is a member from Durham, North Carolina.
These are your neighbors working the polls. They're taking oaths under prosecution if things are done improperly. And there are laws, many laws governing in several levels of reconciliation and ballot counting that ensure the accuracy and validity of the vote.
The committee, Bowens said in a Bloomberg interview, is also dealing with threats to the safety of poll workers. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Yeah. Tim just said to me, turn to me, can I say it?
Yeah.
You're like, this is depressing. I feel like from the absurd to the absurd
Get me to the
reality that we
metaverse
live
as
in.
quick as possible.
See,
This is what you've been saying this.
I know. I feel like it's so dystopian and dark when I'm like, but the way climate change is going, there was a story that we're like headed towards a 2% increase in terms of temperatures, and that's like the no going back. I mean, it's warmer. You were talking about air conditioning in your apartment.
Yeah, we're going through this, and I don't know if anyone wants to hear about this, but it's kind of indicative of the times, right?
Yeah.
In New York City, you have to turn off cooling towers in buildings before the end of the month to drain them and do maintenance on them. That means you can't use air conditioning in certain types of buildings that have this type of old school central air. And they turned it off in our building, and now residents are like, wait a second.
Because it's been warm this week.
This week it's been really warm in New York, and residents are now emailing management companies saying, wait a second, because it kind of happens every year now where we get these really warm days into fall where it kind of feels like it's summer out there.
I've had air conditioning on all week, and it's just, I remember growing up, like we just had windows open all the time, and there was like a couple of weeks in July where it was so hot, and now it's kind of on all
I
the
think
time.
I've said this before, my brother in Seattle, none of the houses in Seattle were built in the 50s and 60s with air conditioner, but now everyone's adding it.
Look at the UK, right?
Yeah. Oh, yeah, of course.
All right, so there's that going on. Happy
Let's talk about
Thursday,
something
everybody.
happier.
Oh, yeah. How about the Pentagon rejecting a ban on using nukes against conventional threats?
Oh, okay.
Yeah.
That
Happy
sounds
Thursday.
good. Yeah, this story by Tony Capaccio. The Pentagon's new national defense strategy rejecting limits, Carol, on using nuclear weapons, long championed by arms control advocates and in the past, even by President Joe Biden.
Yeah, President Biden, pledging in his 2020 presidential campaign to declare that the U.S. nuclear arsenal should be used only to deter or retaliate against a nuclear attack, a position blessed by progressive Democrats and reviled by defense hawks. The threat environment has changed dramatically, as you know, since then, and the Pentagon strategy was forged in cooperation with the White House. Listen, we're looking at Russia, what could happen? We're looking at China, what could happen? We're looking around the world.
Yeah, check out this story and more on our reporting around what's going on in Washington, D.C. and our response to Russia's invasion of Ukraine. You can do that by visiting the Bloomberg terminal.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. All about earnings, specifically Meta and Caterpillar. We've got the Dow higher, S&P, NASDAQ, both on the minus side. Choppy session. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading well off their session highs, with the Dow currently up 273 points, was up 549. S&Ps, like you said, are down. They're down 18, and NASDAQ is lower by 166. The U.S. 10-year yield at 3.94%. Gold is down 5. Energy trading in the green, and Bitcoin is lower by 0.7%. Among the main 11 S&P sectors, leaders were the industrials, financials, and utilities. Telecom led to the downside, and leaders to the upside in the Dow, Caterpillar, and Boeing, while Apple and Intel were under pressure. After earnings, ServiceNow rose 14%. You mentioned Facebook. It fell 25% to its lowest level since 2016. In deal news, Ultra Industrial to be acquired for $62 a share in cash. And in other news, Elon Musk is said to plan to take Twitter public again in 3 to 5 years. Wrapping things up, Apple, Amazon, and Intel report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. We've got you covered on those earnings. Complete special coverage right here on Bloomberg Radio. And to hear live breaking news over your Bloomberg, type SQUA on your Bloomberg terminal. Squawk. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet, you are listening and watching Bloomberg Business Week. We're streaming on Bloomberg Quick Take and on YouTube. Carol Master along with Tim Stenovic. And, you know, I think it's interesting that we've been talking a lot about an alternate universe this week, and yes, the metaverse. But what I really think is interesting is the alternate universe, Tim, that we've been talking about when it comes to green energy and climate adaptation, right? Like, we're thinking about where this all goes.
Yeah, I mean, the conversation has certainly shifted quite a bit, at least for me. And I think on our program, Carol, just over the last, 9 months, it certainly seems like. I mean, think about the way we're talking about nuclear power right now, the way we're talking about power generation, and the way we're talking about climate.
Like, how do we do it? How do we power the world going forward? Well, coming up next is Andy Marsh. He's president and CEO of Plug Power, the maker of hydrogen fuel cells for industrial equipment and vehicles, and so much. Joining us in our Bloomberg Interactive Broker studio. Andy, it is so great to have you here. Welcome.
It's a pleasure to be here, Carol and Tim.
We've had a lot of conversations.
We have.
I want to ask you, though, before we get into, because I know you had an event, I think it was last week, and we want to get into that. But I want to talk to you about something that earlier this month, I think you guys cut your full year revenue guidance by about 5 to 10%.
Sure.
Abandoned plans for 2 plants, and I think you've got some permit delays on a 3rd facility. Tell us about the headwinds and how that changes the growth trajectory for what you guys are trying to do.
Well, Carol, when I take a step back, what we actually told the market was we're not sure whether we're going to meet our targets, and we wanted to back off just so no one was surprised. I think a couple things are important. One, we haven't lost any orders. A lot has to do with construction at our customer sites, as well as supply chain with us.
Okay.
But we continue to, the group, whether some of those deals get done in the 4th quarter or the 1st quarter, the deals are there.
Well,
the deals are real.
Did you caution because of supply chain concerns, or caution that I'm not quite sure about the economy and maybe those deals won't come through?
Oh, with pure supply chain. The deals are there, and look, it's working the supply chain every day. On my drive down from Saratoga Springs this morning, I was on with supply chain issues to make sure we were addressing them. So they're real, but you just have to work at it every day.
Andy, explain what the supply chain challenges are, and specifically when it comes to your business, because we talk about supply chain challenges, and we oftentimes, think about companies trying to get goods from outside the U.S., or maybe they're stuck in a rail yard somewhere.
We've seen it with the cars right now.
Yeah, what's going on with Plug Power?
So, it's interesting. So, simple item, you would think fans are really easy to get, right? So I was on the discussion on the way down about fans that come from Germany, and the issues actually integrated circuits, right? So in fans themselves, there's controllers.
Is that translation? Is that a chip?
That's a chip.
Okay,
issue.
yeah,
I'm sorry.
so-
I'm too much of an engineer, Tim.
But I guess I use the term chip like,
yeah, it's
kind of
a chip.
overarching.
Yeah, so I mean, it was a chip, and that was a part which had a 3-week lead time, and now is
It's chips.
51-week lead time that you have to work through. It, was never a problem any other years, but you figure it out.
So what about the abandoning plans for 2 plants?
Yeah, so 2 plants.
And that's done?
So, first I want to, I talked to one of the analysts at our event said to me, Andy, this moving a quarter, not really a big deal in the big picture, right? We're building this 500-ton green hydrogen plant across the United States. We'll have Georgia done before the year's out. We were down there with the senator from Georgia yesterday going over the plan as they were looking at the hydrogen hub for Georgia. New York was delayed a bit because of associated with some permitting issues. Those things come up. Permits are in place. Tougher to build in the winter than it is to build in the spring. And we'll start going full construction this spring and be up the 3rd quarter with that plant.
So still on track to hit, I think it was a forecast of, was it 200 tons per day of carbon-free fuel by the end of 2023?
You got it.
Still on track. Great.
Still on track.
Okay.
Yeah.
Hey, Andy, we talk about this all the time when you join us. It seems like pretty much, twice a year, 4 times a year. We love having you, by the way. Amazon, Walmart, Home Depot, Kroger, they are your biggest customers. Yeah. What are you hearing from them? We got Amazon earnings after the bell today. What do you hear from Amazon?
Oh, interesting. I would say, Amazon presented at our symposium and last week.
Which was last week, yeah.
And they talked about all the applications that they're looking, they're committed to their 2040 goals, regardless of where all the noise is. They signed a deal for 30 tons a day of green hydrogen with us. They're looking at vehicles with us, with our JV with Renault in France. Yeah. We're looking at stationary products with them to back up data centers. So none of that, all those discussions and movements going, and we're going to have a big year with Amazon this year. We're going to have a big year with Amazon next year with different products too. So it's not just, their goals, to meet their goals is really critical to them.
Well, Andy, when you think about some of the people that you partner with or your big clients, like when we talk about the move towards green, and we constantly have every day on Bloomberg our green vertical and our green reporting team, talking about the climate's getting warmer. We're seeing it this week, again, in terms of, and the impact of it. So do you feel like in terms of the move towards alternative fuels and what you guys are doing, are we, like, when is the tipping point going to happen? Because the big oil giants, they're doing well too, and we're still going to be tapping them for some time.
And we have to be smart about this.
What does that mean? What does that mean?
Look, I'll give you a quick one. We have infrastructure in this country which the fossil fuel companies have developed, which could be leveraged for renewables, i.e. natural gas pipelines could easily use hydrogen mixed in their pipelines. I mean, you can't just, there's activities with carbon capture that has to go on, that to help protect the environment. To think that all these assets are going to go away instantaneously overnight, I don't think it's very smart. I mean, I'll give you another example. I sit on a board of a company called GEVO, which does sustainable aviation fuel, which can go into a long-distance aircraft.
What is sustainable aviation fuel?
So it's kind of biofuels. So you would take something like corn, like ethanol, and you process it a little bit differently to get a higher octane level.
But it still creates emissions.
It creates emission, but you have a zero carbon cycle because you go grow again, right? So you have to think about it, Tim, as...
Yeah, but we need to stop the emissions. I mean, that's a bigger, right?
No, but you...
Get in your electric plane, Carol.
But when I talk about being smart, Carol, if you start with something, if you're growing corn, it grows, it's capturing carbon, you process it, you use that protein for cow feed. Yes, you're emitting CO2, but actually you can end up with negative CO2 depending upon how the farmers till the land.
Right.
So there's ways that, when I say being smart, is trying to look and say, okay, with the tools we have, how can we not only eliminate emissions, but how can you turn it negative?
Can you talk a little bit about the power that's consumed in order to create hydrogen fuel cells? That came up in our panel at the New Jersey Institute of Technology earlier this week.
So uses power. I mean, to generate hydrogen from electricity, it's probably a 50-60% efficient process. You know, if you think about that, boy, that sounds bad. I also will tell you, if you use batteries to back up the grid, it's about a 61% process when you look at self-discharge.
What do those percentages mean?
Oh, okay. So
for the non-engineering
Tim, yeah, no problem, Tim. So how much power you get out for how much power you put in.
Okay.
And power out over power in equals efficiency.
This makes sense.
It's really...
So contextualize that for us. What's the most efficient power generation?
Oh.
Nuclear?
Nuclear probably pretty efficient.
Or are we talking like 80s, 90s?
Yeah, you're probably talking that. But, you know, you have to also think about, Tim, the application, right? So it's great if, you know, let's say batteries. Batteries are not the right solution for heavy-duty vehicles. They weigh too much. They take up too much room. You know, DHL told me one time if we use batteries for our panel truck, and they presented at another symposium we had, they said all they would be doing was carrying batteries around.
They have no room for stuff, right?
They have no room
Wait
for
a second.
stuff.
So that means that, you know, Tesla's Semi is not necessarily the right application?
I think I would not buy that product.
Interesting.
And you probably could justify that product for like a 150-mile run. But then you got to think about how much power you need. So there was work done at the Port of Long Beach, which, you know, when you thought about how to power a truck, for one truck, it was more than the power that went into the station where they hold 50 trucks. I'm actually finding we have a lot of customers who want us to put hydrogen fuel cell systems in place to power electric vehicles because they can't get the power. So, you know, when I say it's not all easy, it's not all black and white. You need people who are really smart thinking about what's the right solution for the right application.
Just got 30 seconds, Andy. You know, what's top of mind for next year?
Well, I think from my perspective, we're going to do $1.4 billion in revenue. In 12 to 15 months, we're going to be positive because of operating income positive because of all the plants we're bringing online. That's the key to my business, getting those plants built to support all our applications.
All right. Well, listen, we love talking with you. And as you can tell, we're kind of really into this subject. And there's so much going on. Andy Marsh, come back soon.
Pleasure. Thank you, Carol. Thanks, Tim.
Good to see you,
Andy Marsh is president and CEO of Plug Power here in our Interactive Brokers studio. And do go online. You can check more about their Innovation Center and Gigafactory event. It was called, what is it?
Plug Power Symposium. Number 4.
Plug Power
Symposium. It was really kind of cool. And it was open to the public, so anybody could go in there. All right, let's get back to your top business stories. Here is Charlie Pellet.
Just about 30 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, all trading mix right now. Right to the numbers because the Dow's holding on to a 280-point gain up by about 0.9%. S&P, though, remains lower, very close to session lows, down 14 points right now, drop there of 0.4%. NASDAQ down 151, drop there of 1.4%. Do want to begin with a headline from the Bloomberg Professional Service. The SEC is probing Tesla over autopilot function statements. That, according to Dow Jones Developing Story, Tesla shares, they are gaining now by 0.7%. It is a rough day, putting it mildly, for Meta Platforms after earnings. That stock plunging now by 24.3%. Wall Street has a ton of earnings news after the close of trading today. We will be hearing from Apple, Amazon, and Intel. Going to be big no matter what happens. So big that we've got special coverage for you coming up on Bloomberg Radio again. Amazon, Apple, and Intel all after the closing bell. Right now, the S&P is down 9, as I mentioned, down 0.2%. The 10-year back below 4%, 3.94%. We have got the 2-year 4.32%. Spot gold down 0.2%, 16.60 the ounce. West Texas Intermediate crude up 1.1%, $8.85 a barrel. So it is a mixed Thursday. As for advice for investors, Caterina Simonetti is Senior Vice President for Private Markets at Morgan Stanley.
We have to look into the long run. We think that the market already priced in the Fed action, but we still have earnings revisions on the table. And until we're done with those, which might take a quarter or even two, the volatility is going to remain high. So average into the market is definitely the way to go here.
And again, we've got the Dow higher. Caterpillar lifting the Dow up by 8.1% on Caterpillar. The Dow up now by 1%. Recapping, S&P down 0.2%. The 10-year 3.94%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Thank you so much. Charlie Pellet there with a Bloomberg Business News Flash. Well, today might be the last day that Twitter trades as a publicly held company.
You're not even going to come out and say it's going to be. You're going to say it might be.
Because you know what? First of all, it's been public for 9 years. Like I went down a rabbit hole in terms of, do you remember it was back in April when Elon first took that 9% passive stake in the company? And then we had Kathy Wood on and we're like, do you think it's passive? And she's like, 9%? Like,
yeah,
that's
tomorrow it could get delisted from the New York Stock Exchange, where it trades as a result of Elon Musk taking it private. Let's get an update from Ed Ludlow. He's West Coast correspondent for Bloomberg News. He joins us from the Bloomberg 960 studio in San Francisco. Ed, shares right now trading at almost $54 a share right now. You spent a lot of time, not quite $54.20, not yet. You spent a lot of time reporting in the last, few months on what's going on inside Twitter. But this week, things really got serious when Elon Musk came in. What do we know about what Elon is going to do when he does take Twitter private? Can I say when he takes it private? Can I just say it like that?
It's not a guarantee.
At this stage, we're moving towards when.
Okay.
What we're hearing from sources is that this is all but done, right? We reported earlier in the week that Musk had informed the bankers on the debt side of the deal that the deal would close by Friday at 5 p.m. and he put a borrowing notice in for the debt, and the debt was put into escrow. I reported in the last 24 hours that actually equity co-investors have already transferred the funds to the Musk team for the deal. So, and then he walks into San Francisco offices of Twitter in the last 24 hours. What he does with the platform is a much bigger forward-looking question, right? Is that where we want to go with this?
Yeah,
well,
feel free.
That's the question.
Since
He's going to throw the kitchen sink at it.
You feel pretty confident.
So I just want to point one thing out for Tim, because I myself was guilty on this. The pun, the Musk walking into the offices with the sink, I'm told, and also, it's kind of in line with Musk's tweet, it's more about let it sink in that he, that this is really happening, and that answers your previous question. Yes, he's in the building. He's going to own the platform. Musk has actually been pretty clear about some of the sort of concrete changes he'd make to the platform, right? Open sourcing the algorithm.
Doesn't he have a bunch of companies to run?
He does, but he put out that statement this morning, right? Our global audience can go to his Twitter account and look at the statement he made, which was largely directed at advertisers. But he said, he cares about free speech. He believes that Twitter, is a tool that can do good for mankind, and that he loves mankind, and that's why he's doing this. But he feels like he's identified the issues with Twitter, which is the bots, the prevalence of bots on the platform. He wants to deal with that. He wants to open source the algorithm so there's more transparency on where certain tweets appear in your timeline and why. Often I go onto Twitter, and you guys know I'm always on Twitter, which is a big question. What happens to all of us on Twitter? There are often questions: why is something appearing where it is and why it is? And then there's the kind of product improvement side. And let's be honest, Elon Musk has got a good track record on product improvement.
Well, and I do wonder about the platform. We've been talking about this a lot. Like those in the media, we love to be on it. It's a great source for finding, hearing about things happening in real time. But I do wonder, where this platform goes, how it ultimately makes money, because while we all love to talk about it, we love to be on it, right? Making it really a moneymaker has been a tough mission.
So the reaction from at least the investors I've spoken to is that Elon Musk's statement this morning was an admission that in the near term, at least, that ad-based model is not going away, right? This open letter was directed at the advertisers, and he talked about how actually the right kinds of ads that are appropriate to the users they're being put in front of can be a force for good. I don't think he's naive that 95% of the company's revenue comes from advertising. What Musk has kind of been consistently acknowledging is that Twitter has this outsized outsized societal influence relative to its user base. And in this open statement, kind of reiterating prior comments, the risk is that Twitter becomes a place where the far left and the far right battle it out, and there's no sort of sensible conversation in between. He believes there can be a sensible conversation in between, which brings me on to say, to answer Tim's question, I think policy is actually going to be a really big focus of what he tries to change here.
Meaning President Trump gets back on the platform?
Well, he's also been consistent about this, that he does not believe in outright bans from the platform. He believes in timeouts. He said that he would reverse Trump's ban. Whether that materializes or not, we don't know. We don't know what's going on inside of Elon Musk's head as much as, we report on him on an hour or minute-by-minute basis. But that's the policy position he stated, a timeout rather than an outright ban.
But there is the risk, and I think about all of us who are on it, and I think about this a lot, that if it becomes this platform where there isn't, kind of a monitoring of misinformation and the possibility of bans, I don't know that I would want to be on that kind of a platform, where you kind of can't trust what's coming along for the most part.
Yeah, I think that the thing that social media broadly is battled with is the risk of having a codified set of rules, right? Meta, previously Facebook, has said, why should it be up to us to make these decisions based on rules? Shouldn't there be a third-party ombudsman or oversight? But, Elon Musk's position has been pretty clear. It needs to support free speech, but that free speech has to operate within the laws of the jurisdiction within which that comment is being made, and then that gets you into the realms of things like inciting, racial hatred and horrible things like that. But there are laws about that here in the United States and in other democracies around the world.
Right.
I think he just wants to not fetter that free speech or restrict it too heavily by having too rigid a codified set of rules.
Well, fascinating story. That's your first book, Ed. You could write on Elon Musk.
Oh, my God. As if I have time to write a book. Come on. Get out of here.
It ain't finished yet. All right, Ed Ludlow, thank you so much. Bloomberg News West Coast correspondent Ed Ludlow. Shares of Twitter, by the way, they're up about 1.1%. 53.90 is the last trade, so they're below 54.20 a share.
Okay, I want to go back to this sync
part?
joke, okay?
Yeah.
If you have to explain the joke, then,
Because you didn't go there yesterday.
No.
None of us did.
I was thinking the kitchen sink, and a lot of people were, but if you have to explain the joke, Carol, then...
What was it? What did he say?
Let that sink in.
Oh, let that sink in.
But it was like a pun, like, let that sink in. Like,
Wouldn't
he's
it be
literally
better
letting
to,
that sink in.
Like, put a rock in a fish tank and let it go to the bottom? Like, sink?
You didn't start a space company.
No, I didn't. Well, thanks, Tim. Thanks for that. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. The U.S. economy grew at a solid pace in the third quarter, marking the first advance of the year. Gross domestic product rose at a 2.6% annualized rate in the July to September period. General Atlantic senior advisor and Nobel laureate Michael Spence tells Bloomberg the numbers show the economy has not faltered under higher interest rates, but he says there are still ways to improve the outlook.
Bring more people into the labor force, but the best way is a big productivity surge, which, with digital and other tools, we might be able to engineer. Now, question, is it going to happen fast enough to sort of help the Fed out of the challenge of cutting demand down to eliminate the inflation rate? No, it won't. But longer term, it's part of the solution.
Spence tells Bloomberg the economy is changing. He believes the days of endless tradable goods may be over. President Biden is getting back on the campaign trail with 11 days until the midterms. The president is in Syracuse this afternoon, showcasing an investment from Micron that'll create 50,000 chip manufacturing jobs. With saber rattling with Russia and China eyeing control of Taiwan, the Pentagon's new national defense strategy is rejecting limits on using nuclear weapons that have long been championed by arms control advocates and even in the past by President Biden. Defense Secretary Lloyd Austin says while China is listed as the nation's biggest concern, the national defense strategy also highlights Russia.
The NDS bluntly describes Russia as an acute threat, and we chose the word acute carefully. Unlike China, Russia can't systemically challenge the United States over the long term.
Defense Secretary Austin. Global news 24 hours a day.
Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, remember, for a while we were talking about kind of all the financial firms, the hedge funds, the hedgies, getting out of Connecticut?
Yeah.
Heading south.
Yeah.
Wall Street South,
Yeah.
Florida.
They didn't do that?
Well, apparently, our Natalie Wong, Hema Parmar, and Lizzie Kane out with a story that says major hedge funds and private equity shops are actually expanding offices in Connecticut, catering to employees who want to stick closer to home. So
Yeah,
they
I
live
mean,
in there and they guess want
They don't have to commute in to
Yeah.
New York City.
Hmm.
So let's talk about this. We got Ken Griffin's Citadel. We got Blue Owl Capital, a division of Rothschild and Company, are among finance firms that have recently increased their footprint or extended leases in places such as Greenwich and Stamford. This, according to people familiar with the matter. Verition Fund Management, already based in Greenwich, is also looking for more offices in the area, the people said.
So it's interesting. We talked to Amanda Gordon, right, about some of the new buildings, including JP Morgan, their headquarters, and others, right, that are opening up here in New York City, smack in Midtown Manhattan, right by Grand Central. And incredible, gorgeous offices with lots of great space and, you know, kind of, I think there was it foosball or I don't know, there was some
And
kind of
even
tables.
commuting in without, and like going underground and not even having to come outside to,
Right.
to get in.
But to get like the finance people back into the office, right?
You know what's better than that?
What's that? Staying
Just,
home?
just having an office so much closer to your home that has all those things.
Well, so this is what, all right, so as finance companies have been at the forefront of calling people back to their New York offices, many have taken additional space in Manhattan to accommodate growing headcounts. At the same time, they're expanding in the suburbs north of the city, areas where home purchases have boomed during the pandemic to keep workers happy and give them more flexibility.
James Rittman is a Stanford-based broker at Newmark Group who says, quote, people just don't want to commute. People are being asked to go back to work in Manhattan, and it's not just an hour commute, it's 1.5 or 2 hours. That becomes pretty tough when you're used to just going to your office in your house or your apartment.
What's interesting, though, even with the surge in interest from finance firms, Fairfield County's office availability, which is where a lot of these places are looking, the rate remains high at 28%. Stanford, we're talking more available space. They have about 32% available. This is Bloomberg.
trends, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The heat is on. Big tech earnings coming up after the closing bell. 13 minutes away from the likes of Apple, Amazon, and Intel. All three trading lower right now. Looking at a 3% drop for Apple. Looking at a 4% drop for Amazon. Intel shares down now by about 3.4%. Intense interest in these tech names after we had Meta sell off by 24.6% after last night's earnings report. So we have got a volatile day with the S&P now down by 17 points, minutes to go ahead of the close, a drop now of 0.5%. The Dow down 236, a decline there of 0.7%. NASDAQ down 164, a drop there of 1.5%. The NASDAQ 100 index, full of big tech names, down now by 1.7%. Interestingly, though, the Russell 2000 is up today by 0.2%. 10-year 3.94%. We've got spot gold down 0.2%, 16.61 the ounce. Bitcoin down 0.5, 20,640 on Bitcoin. And West Texas Intermediate crude is up 1.1%, 88.95 a barrel on WTI. Recapping, stocks mixed and lower. S&P down 15 now, a drop there of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Last Sunday in Beijing, Chinese President Xi Jinping erased any doubts about the scope of his power, filling all the top positions in the Communist Party with loyalists and enforcers. The move suggests China will prioritize ideology over the clear-eyed, practical decision-making that has enabled its stunning post-Mao economic rise. In dealing with this new China, the U.S. and its partners would be wise to remember that the more flexible and realistic they are, the more effective they'll be. Above all, the U.S. must keep seeking opportunities to limit confrontation with China. If Biden meets the Chinese leader at the G20 summit next month in Jakarta, he should give him a better sense of what Chinese actions would elicit a friendlier attitude. U.S.-China tensions may now be unavoidable, but they shouldn't be uncontainable. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, getting a little excited here. Just about 9 minutes left in today's trading session. Down most on the NASDAQ, as you heard from Charlie, on a percentage basis. But we've got some big earnings coming your way. We're talking about Apple. We're talking about Amazon. We're talking about Intel, Pinterest, T-Mobile. But those big tech guys, man, they no doubt will affect the trade in some way or another.
Yeah, we're seeing Amazon and Apple down ahead of earnings. Yeah, Meta Platforms, of course, continuing to decline by more than 20% today. Let's try to understand. Perhaps we have a really good guest on this. I know we do, actually, because he's talking about the return of value investing. Brian Frank is portfolio manager at Frank Capital Partners. He's with us right now in the Bloomberg Interactive Brokers studio, taking a little trip up north from Miami. Brian, good to have you with us. How are you?
Good to be here, Tim. Thanks for having me.
Yeah, good to have you. So let's talk about this idea of a return to value. You're a value investor.
Oh, yeah.
But the last 10 years has, you're chuckling, but it's been growth.
I'm chuckling to keep from crying.
Okay.
It's been a rough 10 years for value investing,
but is the regime shifted?
We're calling it the golden age of value investing that's about to come back here. This reminds me a lot of the beginning of my career in 1999. You got all those tech stocks running. You looked like an old dinosaur if you were buying things like JP Morgan and United Health. But then the next 10 years, I mean, even in that bear market, 2000, 2001, 2002, NASDAQ down 80%, the S&P down 40%, and you had value stocks going up. that sounds like a golden age. And what's happening today? You have the tech stocks down and you have some of the heavy value stocks going up. So from a valuation perspective, it's similar to 99, even after the 20% decline this year. But value stocks look good. They look really good.
That's what I want to ask you, Brian. So it's a valuation call on value versus elsewhere or versus growth, or is it a fundamental call on some of the names that are within the value space?
Probably a mixture of both. So top down, if you look at the Warren Buffett indicator, market cap to GDP, after this 20% decline, it's still 150%. So what that means in English, it's the same valuation, the market, as it was in 1999, which was not a great time to index, not a great time to be broad-based. The 10-year period from 2000 to 2010, stocks were flat. That blows up a lot of planning, if
But
the
is
equity
it the
portion.
same market environment? Can you make an apples-to-apples case?
At least
you know
on
what they say about
valuation.
past history and or past
Oh, yeah.
performance or lack thereof?
That's true. We always disclaim the past performance, but we also say history doesn't repeat, but it rhymes. And what's rhyming right now is just the broad-based valuation there and the difference between value and growth. We're finding some value stocks. I got one in my portfolio. It's going to generate 18% of its enterprise value in cash next year. Compare that to the big stuff in the
Next year?
S&P next year.
That's ticker NEX. It's a mobile hydraulic fracturing units that supply and are in great demand, as you wrote in your notes.
That's exactly right, yeah. And compare that to the big guys, some of the big stocks in the S&P, you got like a 4% free cash flow yield. So that's a big gap.
It's up 181% this year.
It is, and it's still cheap. That's the crazy thing about this. We're
But
not.
that's a real fundamental. Like I think about the energy sector, right? If there's anything you could have banked on in the last couple of years was energy.
Sure.
And
but
almost anything related, it feels like.
you needed a little bit nerves of steel, though. Like as a value guy, you're getting beat over the head every day with the growth stocks in 2020 and 2021, and oil goes negative during COVID. You really got to know your stuff and do the fundamental research to buy something like Nextier when when things are really in pain.
When did you start buying it?
We bought Nextier.
It's about $10 a share right now.
We bought it around $4 a share, I think.
That's a nice trade.
Late last year. Yeah.
This has been such a short time.
Again, yeah. I mean, it was kind of just a rocket that took off. But
so when do you sell it?
We sell it when the valuation is kind of in the middle of its historical range, and it's below its historical range still, just because so much cash is coming in. And the reason it kind of takes off like a rocket there is these companies start returning that cash to shareholders. So I know it's upsetting the administration.
Well, the buybacks, right? And I mean,
Right.
that to me, I'm always we talk about this all the time. It's not like it's a fundamental story. It's just you're buying back shares and it's just basic math.
Sometimes it's that simple.
I know. And you're right. It does make sense, right, in terms of the payback for investors.
Hey, Brad, what happens if, the Fed is able to tame inflation and then the Fed realizes it needs to lower rates in order to spur growth? What happens to your thesis?
Well, I think that's kind of why the market, it was rallying last week. You're starting to get the rumors of the Fed pause, and people are starting to get excited again. Maybe these growth stocks come back. But the way that I read that is the Fed's been talking tough for the whole year about inflation. We had a pretty bad CPI report. The last one surprised negatively again. And now they're talking pause. What that says to me is, what are they worried about? Maybe there's something wrong with the economy. So that's a growth scare. That's not good for growth stocks if they can't grow anymore.
Right, exactly. And this is why we try to, core PCE coming in pretty much as expected, but it's down from the prior read, and we thought there was maybe some optimism. One more name, because I love when we can talk stocks, KOF, Coca-Cola FEMSA.
Sure, I love to talk stocks too, Carol, all day long.
I know you do.
KOF is the largest distributor of Coca-Cola in the world.
Yeah,
their top markets are Mexico and Brazil. And what's interesting about that, you would think, they're getting killed on the dollar. The Mexican peso and the Brazilian real are actually up on the year against the dollar. So you have a recession-resistant company. You have economies that are waking up from COVID, and they're doing great, and it pays a 4% dividend.
That's what I was just looking at the dividend. That was pretty significant. It's up about 14% if I look at the ADRs that trade here in the United States. So really seeing some outperformance. Can you, in 30 seconds, tell us about Opera Limited?
Absolutely. So you wouldn't think I'd be buying a tech stock as a value investor, but again, the numbers make sense on this one. This company just bought back 20% of its shares outstanding in an extremely short period of time. It's heavily insider owned, so it's a small float.
Yeah.
They actually have an
It's
authorization.
a $479 million market cap, small.
It is, and the float is tiny.
Yeah.
And they've authorized more buyback than there's actual float. So it's almost like a stealth take private. So I think it could really get squeezed higher because I'm not selling it at this
So
price.
it's not a fundamental play. It's just kind of what they're doing here, right, in terms of the buyback?
Well, fundamentally, it's strong too. So they own the Opera web browser, which is a great business.
Okay.
Every time you type in a search, they get paid, and that's going up this year. They actually have growth.
Love talking names. Love having you in studio. Brian, thank you so much.
Thanks, Carol.
Look forward to next time. Brian Frank, he's portfolio manager at Frank Capital Partners, joining us here in our interactive broker studio. His Frank Value Fund, by the way, up 4% in the past year, beating just about all of its peers in that value category. All right, time to head over to our TV colleagues, talk about all the earnings coming, and talk about the market trade, radio, TV, YouTube, and on Quick Take.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audience across Bloomberg Television and Radio as well as on YouTube. A day here, Carol, where 61 S&P 500 companies reporting. About half of those did it before the bell, the other half after the bell, including the granddaddy, the heavyweight, Apple.
Yeah, a lot of earnings coming down. And it's
Yeah.
negative sentiment as we head
There's
into
no
these
Chinese tech stocks reporting after the bell.
I thought you were going to the metaverse. There's still time. It's still
trying to get rid of
him
me?
out of
All right.
IRL.
All I'm going to say is it feels like very negative sentiment as we head into these earnings. And take a look at Amazon, Intel, Apple, Pinterest. They're all lower, in particular Amazon, Intel, and Apple, as we head into their earnings just moments away.
Yeah, what's interesting, though, is if you look on an index level, it's just a real choppy day with the S&P 500 moving between gains and losses, about 8 times today. So investors not really making up their mind.
Really interesting that a consistent narrative that we've actually now had for about 3 straight days is one of yields lower. We certainly don't want to opine too much and make a lot about 3 days, but it is sort of signaling a message with the 10-year back below 4% that maybe there is some starting to be priced in slower growth on the horizon.
We've seen decent volume as well today. We're higher 13% versus your average on the S&P. We've seen decent volume in the NASDAQ, even though it's been to the downside in terms of where you're putting your money.
Yeah, interesting the moves too. I mean, looking at the Russell 2000 right now, basically unchanged on the day. It was up about a 1.5% here on the day. That was the strength. The Dow Jones Industrial Average holding on to some of its strength, with Caterpillar up 7%, McDonald's up about 3%, even something like Merck up 1% on the day. You add it all together, and as we get the closing bells, you get a Dow Jones Industrial Average higher by about 200 points, or 0.6%. S&P 500 in the opposite direction, going to close lower by about 5 to 0.6%. The NASDAQ Composite down by about 1.6% on the back of that huge slide that we're seeing in Meta Platforms, and the Russell 2000, as we just mentioned, up on the day, but only by about 0.1%.
Yeah, kind of an even split. A little bit more of a bullish tone when you look at the S&P 500, Taylor. 280 names gaining in today's session, 222 to the downside, 1 unchanged.
Take a look at where we are on some of the individual sector levels, sort of 2 dives underneath the surface. And indeed, well, it feels sort of like that industrial when you think about capital goods. Some of the dividend financials, of course, interesting given that yields are falling. And then, of course, all the way down to the bottom, Carol, it is exactly what you would expect. It's semiconductors, it's software and services, it's technology, hardware, and of course, it is media and entertainment. Those are the worst performers as we push forward and await Amazon.
All right, we are waiting. I'm kind of glued to the terminal. In the meantime, Twitter, one of the standouts, was up about 0.8%. Remember that court order deadline? It is tomorrow, so the end beginning may be near. And now we've got Amazon coming across the Bloomberg, Romaine.
Yeah, Amazon results coming across the wire right now. Interesting sort of setup here for the numbers. When we talk about what happened in 3Q, we're going to walk you through them right now. 3Q net sales coming in at $127 billion. That's pretty much in line with estimates, which were for 127.6 consensus. So I guess we can call that a match. Operating income at $2.5 billion. That's a big miss. The street was looking for $3.11 billion here. 3Q EPS at 28 cents. The street was looking for 22 cents. So a beat. Here's your forecast going forward. Fourth quarter net sales, $140 billion to $148 billion. That is the range that they're giving. The street on average was looking for $155 billion. So a miss on the guidance for 4Q net sales here. Something to keep an eye on. We're going to dig a little bit deeper into these numbers, guys, but right now you're looking at a stock down 11%. That's the knee-jerk reaction here for a company that appears to be showing a little bit of a slowdown here in both revenue growth as well as some of their operating numbers.
And that
story is so similar when you take a look at Intel. Now looking at fourth quarter adjusted revenue of $14 to $15 billion. Estimates on the street had been for $16.3 billion, and that flows through to a huge miss on the bottom line for the fourth quarter adjusted EPS of 20 cents a share. Estimates had been for 66 cents a share. They talk a lot about how they want to be driving efficiencies across their business. They're focused on embracing an internal foundry model, doing all of that while also aggressively addressing costs. So again, a full year revenue and a fourth quarter revenue that miss heavily on that guidance going forward.
Yeah, I want to go back to Amazon because we are seeing this obviously a big one. I'm looking at the press release. Andy Jassy, of course, the Amazon CEO, saying there's obviously a lot happening in the macroeconomic environment and will balance our investments to be more streamlined without compromising our key long-term strategic bets. I mean, Caroline, one of the big things is bringing down some of their costs.
I mean, the fact that they're also continuing to see international, well, lackluster numbers in terms of a decrease in sales of some 5% coming from the international perspective. Is that an FX read across? The fact that we are still seeing some strength in 27% from AWS, but this is a company that, of course, has been having to streamline, and an Andy Jassy that says he's encouraged by steady progress, but having to lower the costs in stores, fulfillment network as well. These are initiatives that they're going to have to bring to bear.
I think the AWS net, I mean, you mentioned the growth, 27%, that's great, right? But it is a miss, and it's a significant miss here by roughly about $1 billion of what the street was looking for when you talk about on the dollar basis. That was the strength of this company. So if that isn't there, that growth doesn't remain, it raises some other issues. I do just want to point out two other interesting numbers that jumped out at me, and you kind of touched on this. The 5% decline we saw in international net sales, which I think is significant, and the idea that when you take Amazon Web Services and you exclude the FX effect, you go from 27% to 39% here, but even that, I think maybe not quite what the street was expecting here, and you wonder sort of whether it is the 3Q numbers or the 4Q guidance that is causing what is now an 18% drop in the shares.
And do we need to talk about the free cash flow that is actually now an outflow of almost $20 billion for the trailing 12 months? They've had an inflow of $2.6 billion for the 12 months before that in the previous quarter. A similar story with Meta when our question was, what happened to free cash flow? You could also pose this question here to Amazon.
Shares continuing to move lower in the after hours. Amazon shares down 18.2%. That is the knee-jerk reaction. My question for Andy Jassy would be, point out specifically how you're going to decrease costs in this environment. What does that look like? How are you going to get costs lower? Because you know his entire statement in the press release is about the cost structure.
All right. Well, we talk about the shares being down and the idea that when you had the big declines in Meta and some of the other companies earlier this week, it didn't have a huge impact on the market. We should point out that the NASDAQ 100 closed down by 1.9%. NASDAQ 100 futures here in the post-market down 3% here. So the Amazon effect negative here for the broader market. Poonam Goyal, Senior U.S. Retail Analyst at Bloomberg Intelligence, joining us right now to walk us through this. Poonam, when you look at the market reaction here and you look at the data that we got out of this company today, is that in sync? Is this as bad as a knee-jerk reaction seems to make it look?
It's actually pretty bad across the board. It's hard to find something good in this press release. Sales were weak across the board. Guidance is weak. Margins are weak. I mean, overall, you know, the bright star here that used to be AWS is also weaker, both on sales and margin. So I think there's a lot to digest, but it's kind of humming the same tunes as other results that we've seen earlier, where the consumer is slowing, spending is slowing, and hence the results are much weaker than expected.
You know, Poonam, Andy Jassy, the CEO, saying we're also encouraged by the steady progress we're making on lowering costs in our stores fulfillment network. You talk about that operating margin, 2% versus 2.48% was expected. That's not good. I mean, that's how you make some money going forward. Where is the cost problem when it comes to Amazon?
Well, I think part of the miss that you saw in the operating margin was AWS-led. Keep in mind that AWS generates the bulk of Amazon's profit, and margins did come in 2 percentage points lower than were expected. So that's probably why the total margins are much lower than expected. Not to say that they haven't been making those cost-saving initiatives or that they're not tracking, but AWS is a big contributor to the miss there.
Pono, I just want to go back to one thing here, and this is on the forecast that Amazon is giving. Net sales, 140 to 148 billion. But I'm looking at their operating income forecasts. The street was looking for 4.66 billion. They're providing a range of 0 to to $4 billion. Now, I'm less concerned about the fact that this actually misses the street estimates and a little bit more concerned here about how wide that range is. And I'm wondering, A, why they would provide such a wide range, and two, do you think that's going to be problematic here going forward?
Well, the wide range is probably a function of two things. One, fourth quarter, right? It's a big quarter. It's holiday quarter. We know there's a lot of inventory across retail, and there will be promotions and markdowns. So we don't know where margins will really end up to be. It'll be a function of demand. And second, if AWS margins continue to tick down or are weaker like they were in 3Q, then that's also going to impact profitability.
Talk to us about the profitability that they are having to still hire, what they told the market, 150,000 people for open seasonal full-time, part-time roles. When we heard that number previously, we were like, oh, that's good. Amazon's still going to be hiring, still thinking it's going to be a big consumer holiday season. But is it when we get in that guide of a slowing consumer here? What are the reads?
Yeah, I mean, they have to hire, right? You're talking about a quarter where sales are going to be anywhere north of $65 to $70 billion. And that's a significant increase from the prior quarters or the earlier quarters in the year. So they need the infrastructure and also the support to fulfill these orders. So the holiday hiring is evident. Is it going to transfer into double-digit sales? Not likely. I mean, that's what the guide suggests. So we are concerned with the slowing consumer environment and its impacting Amazon too, even though they had that second Prime Day, right, in the fourth quarter.
Which no one noticed.
Well, so Poonam, it raises the question about where investors should look to for cuts. I mean, this is a company that has sort of being lean in its DNA. I mean, Jeff Bezos in the early days prided himself on using old doors from Home Depot instead of buying actual desks because they were cheaper. Where can the company cut?
I think they just have to go back to their investments and really think critically about where the growth is and invest here. We saw them pull back on the project, regarding drone delivery, and there will be others like that they'll just have to pull back on temporarily or forever because it's not going anywhere anytime soon.
Sort of leads us to a big picture question, Poonam. This is an investor base that was patient while the company took a lot of the profitability from AWS, used it to subsidize the retail, the logistics, the sort of freight company that Amazon had become. How patient is this investor base going forward?
I think the investor base is losing patience. We see that in the market's reaction, right, for tech stocks where profitability is really in play and growth is slowing. You can see that at least this year. So it's about reigniting growth, reigniting profits. We still firmly believe that AWS can be more profitable longer term. So there is, hope that profits will get better. But on the retail side of the business, wages, distribution, fulfillment, these costs don't appear to be going down, and that's where its struggles will lie.
Poonam, we thank you so much for your immediate reaction. Not looking too good for Amazon. Poonam Goyal, Senior U.S. Retail Analyst for Bloomberg Intelligence. Even more expertise coming from our benches here at Bloomberg. It is one Amazon reporter. You know him, it's Spencer Soper. He's here in New York, and I'm interested as to what your read across is. What is Andy Jassy going to have to say to the market in these earnings calls? Oh, Spencer, unfortunately, we've just lost him on the phone. We will be looking more at Amazon in a moment, but let's dive into a stock that's actually performing rather well after hours. Pinterest. You knock it aside, but it is still bigger player than Twitter in terms of number of users. It is up 13% after hours. Is it a relief rally, or is it actually something fundamental we're seeing in the numbers? Mandeep Singh's with us, of course, from Bloomberg Intelligence. And what do we have to like about the Pinterest numbers?
Well, the US DAU number was better than expected. Clearly, that is what drives a lot of their revenue, the US portion, and that was a sticking point over the last 3 quarters. So they seem to have improved sequentially. It was still a decline, but better than expected. And look, with a company like Pinterest, they've gone through a lot. Management change, they were underperforming, expectations were really low. So what they have done here is executed better. And, with any consumer internet social media name, it's all about engagement and, making sure your core audience sticks to your social network. And that's what we are seeing in the print here.
Engagement and monetization. Is this a company that in this weaker macro environment has a better, maybe more engaged, maybe smaller, but a better way to monetize that user base?
Well, so they talk about visual search quite a bit, and Alphabet in their earnings called out visual search as an area of focus. So I can see, Alphabet being a competitor in the medium to long term. But look, when it comes to Pinterest, they clearly are trying to pivot more towards videos, something that Meta is trying to do through Reels. All the social networks are trying to catch up to TikTok. They're making investments. But you have to make sure that you are capturing your core audience. In the case of Pinterest, their daily active users is much smaller than a Meta or any of the other. And that's what they're showing in the results. They had an ARPU growth, whereas all the other social media platforms talked about pricing being a challenge in this quarter. So clearly, the pricing seems to be holding up better for Pinterest.
So, Mandeep, I do wonder with all the social media companies as we try to figure out their way forward, we look at the, ad-based model. I mean, is there a clear vision in terms of sustainability for a company like Pinterest? Do we see that long term, they will be one of the survivors? Because it just feels like there's a mixed bag when it comes to players in this space.
Yes, and Carol, to your point, I think the larger networks have a better chance of surviving. The smaller ones, clearly, if you have Alphabet competing for visual search, even though they are not a social media kind of network compared to what Pinterest is, but, people go to Pinterest for specific searches, specific type of ideas. If Alphabet tomorrow kind of enhances their Google search page to incorporate a lot of that, that will be a headwind. And in the case of Pinterest, it's just too small, So if Apple has made IDFA changes, that's going to hurt Pinterest because their ad targeting goes down. It's not reflected in this print, but still, the smaller you are, the harder the challenges are, and you can always have more competition from the like of TikTok or Alphabet for that matter.
All right, Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence, taking a look there at Pinterest earnings, up 14% here on the day. The opposite is Amazon, down 19% here in after hours trading. If that actually materializes into tomorrow's numbers, it's going to be the biggest one-day decline that we've seen on Amazon going back to 2006. Amazon reporter Spencer Soper joining us right now to talk a little bit more about these numbers. 15% growth on revenue in the most recent quarter. They expect growth in the fourth quarter, Spencer, but not as much as the street was expecting.
Yeah, big mismatch, especially the forecast for the fourth quarter. The sales are coming in light. The guide on income is coming in light, and so just a big signal that the holiday quarter is going to be a lot more painful than investors expected it would be.
So lay out for us the challenge that Andy Jassy, Spencer, has ahead for him as he continues to try to essentially bring Amazon back, after he's been CEO for, a year now?
Yeah, so he's going to have to show that he can be disciplined, that he can cut expenses to get in line with the slowdown in revenues, and that's the big challenge. Is Amazon's been so used to being able to pretty much spend its way, and the market's been very forgiving. That those days are coming to an end, and they're going to be looking for more discipline. He might have some harder decisions to make. Right now, he's cut some experimental programs and imposed a hiring freeze, but Amazon might have to go deeper than that.
To that end, I mean, Amazon has always served us such strong sort of growth trajectory that we started to delve into what about advertising businesses? What about new fires of energy coming for Amazon? And at the moment, we haven't even brought up whether the advertising area is showing growth. Are you likely to see a doubling down on the content side on that sort of area, or is that where we could see a little bit of a pullback?
Yeah, definitely. Technology and content is kind of bundled together, and that's where a lot of these experimental projects are, as well as all of the video programming. That's a big bucket that they could drain from. And then on the advertising side, that did come in decent, and I think that they'll fare better than, say, like Facebook and Google in the digital ad market, just because if consumers are pulling back, advertisers want to be as close to customers as they can when they're in a shopping mindset, and that's really what differentiates Amazon from some of their competitors for digital advertising dollars.
Hey, we just want to remind everybody, we're talking about Amazon out with their earnings after the closing bell. Stock down about 19% here in the aftermarket. The big red stickies, we like to say at Bloomberg, fourth quarter net sales, a big miss. 140 to 148 is what they are putting out there. The estimate on the street is 155.52 billion. We're talking with our Spencer Soper of Bloomberg News, knows this company inside and out. So, Spencer, when you look at this, how much of what we're hearing from Amazon is a result result of a sign of the times and what it tells us about the economic environment and the outlook? How much is it, though, is very company specific?
I mean, it's a little of both. I think there was expectation that this was an opportunity for Amazon to stand out if consumers are pulling back and looking for deals and value, as well as convenience, that they would be putting their spending on Amazon. But this is a signal from Amazon that in this environment that they're not expecting people to spend as much with them as investors thought. So I think you can read two things into that, both on the consumer side maybe being a little bit weaker, and on the on Amazon side not winning as much market share in this environment.
Spencer, we've long talked about this company that was investing heavily in same-day, two-day shipping, an investor base that was eagerly waiting the payoff from those investments. Do you see that payoff coming anytime soon?
That's a great question, and the Amazon philosophy has always been keep investing in faster delivery, faster delivery, faster delivery, because the feeling was someone is willing to wait 2 days for some things, only a day for other things, wants something same day, and that if they can get as much inventory as they can in that same day delivery window, that they just keep peeling more and more sales away from stores. But it's very expensive, and so in this environment, it's going to be very difficult for them to continue that sort of investment cycle if they're not showing results from it.
Really appreciate it. Our Amazon reporter, Spencer Soper, joining us, of course, here from our very own headquarters. Caroline, we think about recapping Amazon as well. And, we just want to revisit Intel as well, because this is a stock that's been trying to bounce around. We've thought a lot about the impacts of the chip environment. And again, it was a fourth quarter adjusted revenue. $14 to $15 billion. Estimates.
I'm just going to move in. Maybe we've got a technical issue with the microphone over there. Unfortunately, Taylor will get us sorted out. But let's have a quick look at the breakdown on Intel. Shares rising after hours. We're looking ahead to Apple earnings as well in just, 10 minutes' time. Crawford Delpret is with us, International Data Corp president. First and foremost, dissect the Intel numbers, a relief after what, the CEO himself, Pat Gelsinger, had said is going to be the worst of it, the third quarter.
Yeah, great to talk to you, Caroline. Yeah, I mean, I think that there is some relief around Intel. I think there's been so much bad news around the PC sector. When you look at the IT sector, we started this year expecting IT demand somewhere between 5% and 6%. We're now hovering in around 3.5%. And the majority of the takedown that we've seen in revenue growth has been in the PC sector and in the phone sector. And so, Intel has been on the front lines, if you will, of the weakening of demand. And I think that so much of the bad news has been out there and has been getting out there, and people have kind of braced themselves for it. So I think that is what you're seeing is some relief.
Crawford, help me understand, though. They're talking about fiscal year adjusted revenue, 63 to 64 billion. It has seen 65 to 68. They're also talking about cost reductions to 8 to 10 billion annualized by the end of 2025. If they're reining in costs, I mean, I thought we were talking about expansion, like, Intel spending to be, more of a significant player going forward, where they've lost share to a lot of other players. So help me square that.
Yeah, Carol, it's a great question. So, we pulled in during this pandemic 18 months, 2 years of demand. And I think people got super excited about the category. And now what we're seeing is we're resetting, right? And so in the third quarter, we saw the PC market come down 15%. In the fourth quarter, we'll likely see the market come down 20% in units. And for the year, we'll see the market down about 15% in aggregate. So I think we're seeing a massive reset on the part of the market. Of course, Intel being the largest player in that market. Now, having said that, yeah, there's a lot of mixed messages coming out of Intel right now, in the sense that they want to invest. They must invest for the future to be relevant in more markets and to be more competitive in more markets, and frankly, to bring some of that production back onshore here. But at the same time, their costs are too high. And so they've got to reduce costs. And so what are you going to see? You're likely going to see sales get hit hard. You're going to see marketing get hit hard. And you'll see areas around core engineering probably hit fairly hard. So as they retrench.
we're in conversation right now with Crawford Del Pret over at IDC, International Data Corp. He's sticking with us as we walk you through some of the earnings we've already got out of Intel and push ahead to pending earnings here on Apple. But we do want to bring you some breaking news. This is on Twitter and that deal by Elon Musk to buy the company. There's been a lot of great reporting out of Ed Ludlow saying that this deal has effectively been closed. And now we're learning that the MSCI Global has actually already announced that they are removing Twitter from the indices starting effective basically on November 1st, which is next Tuesday. This seems to be the first actual public confirmation by anyone that basically this deal is a done deal. Twitter no longer going to be a public company, guys.
Yeah, this is after being, what, a publicly held company for 9 years, so a very significant change. And you think about, man, this saga has been going on since early April, right? And, you know, when he took that passive, but more than 9% position, didn't want to be part of the board, and then it just started to unravel from there.
At the moment, we're seeing Twitter just ever so slightly continuing to be up on after hours, but only up about 0.2%. So not the euphoria in the market that we're likely to see, and of course, all eyes on that key decision-making process that comes tomorrow. Crawford, just back to you for a moment as we're dissecting what's happening on Twitter, and as and when it gets taken out of being a public company. We're at $53.81 after hours. Talk to us about what's happening as you push us forward to Apple. We have but 7 minutes to go until the big daddy of them all starts to report. Are we anticipating some sort of signs of continued growth, consumer resilience, and people wanting to be buying? Is Crawford there?
The iPhone goes and vice versa. So we're expecting that we will likely see somewhere around negative, a drop of about 8% for iPhone shipments. So, you know, before I get to the other categories, let's unpack that for a minute. I think that when you have inflation as high as we've had inflation around the world, and you have consumer budgets that are a finite amount of money people can spend, the money has got to go somewhere. And when it's going to $6 gasoline, or when it's going to food that's escalating in prices, I think that the decision a lot of people make is, you know, maybe we can go another 6 months, another year before we upgrade our phone. And so we're seeing that. And I think we expect to see that in those iPhone shipments.
Hey, Crawford, Apple is, you know, when we talk Apple, China is an incredibly important market to this company. We can't ignore everything that's been happening in China over the last few months, and most recently what we got in terms of President Xi just solidifying his power there. From a production standpoint and from a sales standpoint, what commentary are you looking for from Tim Cook and others about their position in China?
Yeah, hey, hi, Tim. So I think what you want to really understand is how open is that market going to continue to be to Apple? How receptive are they going to be? There are some players in China, you know, who want to be who are super competitive, like Huawei. And I think that, you know, we're definitely going to be looking for comments around the runway, I think, for lack of a better term, that Apple can have in China for products, you know, sold locally. It is an absolute desired brand. It has been an aspirational brand in China. And I think that those are the comments that we're looking for around access and continued access to that, you know, what is an incredibly premium product in China.
Talk to us about some of the privacy issues, the changes that Apple has made, some of the big ripple effects that we've seen with Snap, with Meta, you name it. How are you thinking about if a lot of those impacts are behind us or still yet to come?
Yeah, Taylor, I don't think that they are behind us. I think that you're going to see services continue to be the second most important and increasingly most important category for Apple. And we're expecting that they will be able to show in the range of double-digit growth for that category. And I think Apple's going to do everything they can to try to protect their services and protect their ecosystem in order to make services grow for two reasons. One, it's the second largest category that the company's got. Number two, it is sticky. Services are super sticky, and we have seen services continue to be sticky and continue to be resilient. And Apple knows that, and the extent that they can put on a defensive posture to companies that, you know, maybe want to come in, as well as push their services forward, that's a great business decision for them.
All right, Crawford, really appreciate you taking time to be with us ahead of International Data Corp, helping us push ahead to those Apple earnings, which should cross the wire in just a few minutes. Before we get to that, we do want to go back to Twitter. Bloomberg's Ed Ludlow has been all over this story for the last few days, and really the last few months, and it looks like this 7-8 month saga has finally come to an end. We're starting to get more and more confirmation, Ed, that this deal for Elon Musk to buy Twitter is done.
Yeah, redhead crossing the Bloomberg terminal, that Twitter will be removed from MSCI global indexes. This is largely mechanics, right? If you think about the context of this deal, sources have told us the paperwork's done. Many of the equity co-investors have handed over the funds to the Musk team. We know that the debt part of this deal has been placed into escrow by the banks, but the deal cannot be completed until the public equity shareholders of note receive compensation for their shares, right? And that's the mechanics of the deal. NYSE has had a notice on its website all day long that shares will be suspended, or trading will be suspended from the NYSE pending market open Friday. So look, all the signs are we're moving in the right direction. It's an issue of mechanics. Everyone's very excited. Romain, I know you're very excited, but let's just wait for the official announcement.
Well, this is all about saving humanity, Ed. So who wouldn't be excited?
According to that note this morning, it is.
Sure.
I mean,
I don't even know what to say.
To be fair, Ed, I mean, Elon doesn't have a choice, right? I mean, he's contractually bound to do this at this point.
Well, hold on a minute. I don't want to cause confusion in the market. That's the last thing I want to do. But until we have a confirmation by 5 p.m. Eastern time on Friday, the direction of the Delaware Chancery Court is that that's a deadline. If the deal is not completed and a formal announcement's not made by 5 p.m. Eastern time on Friday, the position of the court is we're heading to trial in Delaware in November. Everyone was very excited about going to Delaware. That's why I say, let's wait for it to happen.
Really?
Ed was excited about
what
going
kind
to
of company
Delaware.
do you keep?
Ed wants
He
to
had
visit
his
every
hotel
state.
booked. He had looked at what restaurants he wanted to go to. And
Tax-free shopping out there.
Yeah.
Beaches.
But Ed, overall, like, are there any still question marks left to be solved here? Are there any questions as to what money has to be coming from where? Any more pressure on Tesla's share price? Or is it all baked in now?
Yeah, I think a lot of the market was watching for a regulatory filing to hit at 10 p.m. Eastern last night, because if Musk had sold Tesla shares Monday, the deadline to disclose them was 10 p.m. Eastern time last night. That did not happen. There's still a nervousness about the need to sell additional Tesla stock to fund this deal. I've spoken to new equity co-investors who came on board this week, have this paperwork signed and have transferred their funds. So maybe Musk brought people in at the last minute. I really think the big questions, Mark, we move on, right? What does Twitter look like going forward? What is its name? What are the material changes that Musk makes to the underlying technology that powers the platform? And as we reported last night, according to sources, Musk told employees in that San Francisco office that he's not laying off 75% of the workforce. He didn't give a number. He didn't deny that, generally speaking, layoffs are coming, but he said that 75% number, he didn't know where it came from. So there's still a lot of question marks about the health of the business, where he takes it, but that open letter he posted on Twitter this morning to advertisers suggests in the near term the ad model stays.
Ed Ludlow, really appreciate it. Joining us, of course, there from the SF office. And we think about you guys just recapping as we count down just a few more seconds until we get Apple. Just the digestion of big tech really under pressure in the after hours market. Romain, Amazon, of course, leading
I just want to mention Amazon one more time before we get to Apple, because I mean, a 20% drop in this company is rare. We've only really had it a couple of times back in 2006 and 2001.
But its market cap was much less important.
Much less here, but the percentage dropped significant. I believe Apple share is now crossing the wire here. Interesting results, guys. Take it away.
We have fourth quarter of iPhone revenue, $42.6 billion, right on line with estimates, $42.67 billion. Fourth quarter iPad revenue, $7.17 billion, well below estimates of $7.8 billion from the street. Service revenue a little bit here in line, $19.19 billion. Estimates were for $19.97, so a little bit of a miss. Overall, let me just break these numbers down. Fourth quarter overall revenue looks good, $90.1 billion. Estimates were for $88.6 billion. All the way down to the bottom line, a little bit of an improvement, $129 versus estimates of $126. Greater China revenue, maybe not as bad as we think, only $15.5 billion. Estimates had been for 15.65 billion. And then, of course, we break it down. The Mac products look good, Carol, and wearables as well look very strong.
Well, and how often do we talk about the infrastructure, the network, the closed network that Apple has created that just forces you to buy more products? And we've got a headline from Apple saying their active installed base of devices reaching an all-time high. That has been such power and leverage for them, Caroline.
Let's go into the earnings statement. Tim Cook talking about the quarter's results reflecting Apple's commitment to our customers' pursuit of innovation. But the CFO, Luca Maestri, talking about a record September results, continuing to demonstrate our ability to execute effectively in spite of a challenging and volatile macroeconomic backdrop. They are seeing that, but continuing to show strength of their ecosystem, unmatched customer loyalty they talk about, and of course revenue growing over 28 billion and operating cash flow up 18 billion versus last year. This sounds like a optimistic and pretty buoyant CFO here.
Yeah, it certainly does. And look, that installed base going to a record is certainly obviously important because the more people who have these devices, the more people Apple can sell services to, an incredibly important sector. More comments from CEO Tim Cook. He says, as we head into the holiday season with our most powerful lineup ever, we are leading with our values in every action we take and every decision we make. I want to read this part really closely. He says, we're deeply committed to protecting the environment, to securing user privacy and strengthening accessibility. The user privacy, a big one there, because if we think about the changes that Apple made with IDFA, that is what has led to declines in the online advertising stalwarts, including Google and Meta platforms.
Well, right now, the market reaction is decidedly negative, down 5%. Big part of the reason why you're seeing NASDAQ futures now down 4% here. That's even after sort of the big drop that we had going on in Amazon. But when you look at the miss that we're seeing on services, a modest miss, 19.2 billion versus basically a $20 billion look that the street was looking for, as well as a slight miss when it comes to that iPhone revenue at 42.63 billion versus 42.67. I wonder if that's one of the reasons why you're seeing the negative reaction here. And of course, we should remind people we don't actually get any real guidance until that conference call, so nothing really to hang your hat on there either.
Just a couple of paragraphs in the press release. At least we can hang our hat on some comments that we're going to be getting from Daniel Flax, Neuberger Berman, Senior Research Analyst. Great to have you. Thank you for your time. We're sort of breaking down these numbers, and then we're also getting numbers about the strength of the operating cash flow. They're still looking at $24 billion in operating cash flow, and cash flow that's still up $18 billion versus last year. Is that enough to offset some of the small misses that we're seeing within the top numbers?
Good afternoon. Great to be with you. I think what we're seeing is that Apple is continuing to navigate what is, of course, a very challenging environment. And the results demonstrate that really this broadening of the revenue drivers, the continued growth of the installed base, execution on product cycles across the phone, across wearables, the watch, Ultra, which is their new one, iPad, all of that the company is doing well on. I think as we saw with Amazon results, and I think what people will worry about in the very near term is of course, some of the cyclical headwinds. But if Apple is able to continue to pull everything together, hardware, software, and services, and do it in a fun, secure, and private way, I think the company will be successful through this period and, more importantly, coming out of it.
All right. So, Daniel, let me ask you. I mean, here we see shares of Apple. They're down in the aftermarket, down about 3.5%. Does that make sense to you? And would you be a buyer then in terms of some of the losses here? Is that a buying opportunity?
I like Apple stock here. I would be a buyer at current levels. And I think it's going, the success of this company is going to continue to be driven by their ability to delight users and really empower people. If we think about what's going on here beyond just the quarter and of course, the challenging environment, Apple is a story of empowering developers. The company's paid out over $260 billion to developers since they opened the App Store more than a decade ago. So even though services is a little weaker than expected, the App Store, we recall, has of course been very, very strong throughout the pandemic. Some of that is slowing as people re-engage in the physical world. But the drivers in services, among other areas, things like Fitness Plus, the drivers, I think, are healthy. And so if we think about what Apple will look like through the next several months and as we look into the back half of next year and into 2024, I think there will be solid growth.
And from all places in the world, the fact that we're getting slightly light number from Greater China in terms of revenue, 15.47 billion, the estimate had been for 15.65. How much are they dependent on global growth or global slowdown here?
China's an important market for Apple. Clearly, there is a dynamic with the compares in China and other parts of the and other geographies, and they will lap that. Currency, as we know, is also a headwind that will be ultimately transitory, but that does impact the numbers. I think specifically to China, the key is that Apple is able to delight Chinese users, continue to attract Chinese developers, and execute on its business in the country from a production standpoint as well.
How big of a risk is that, Daniel? We continue to see President Xi's commitment to COVID zero, and we see Apple, at least in a very small way, moving some production to other countries, including India, which they've been doing for years to develop some iPhones there. But how big of a risk is what's happening in China to Apple's overall business?
I think it's a factor, and certainly the COVID lockdowns have impaired demand and has also impaired production of the devices. But China, as I think about the next 5 to 10 years, will remain very, very important to Apple. But if you think about the products themselves, a lot of the components, the intellectual property, is coming from many countries. It might be assembled in the end in China, but it has a lot of pieces from elsewhere. You mentioned India; they're expanding there. They're expanding in other markets. But I still expect China to remain very, very important to Apple over the next several years.
What's the growth story, the longer-term growth story here, Daniel, for Apple? It's iPhones, to a smaller extent Macs and the iPads. It's a great ecosystem, but as we've seen with other companies of this size and more importantly of this maturity, there always comes that inflection point where if they don't come up with something new, someone else will.
I think if we look back and think about the iPod, what they were able to do, they were able to reinvent the listening experience. And there was, of course, the device, iTunes, the ability to procure a music track for 99 cents. And then, of course, the iPhone, the iPad. And as we look out over the next several years, I think you're going to see more and more growth in wearables. I think that opportunity is just getting going. I think over the next few years, you could see Apple enter the augmented reality market. The key there as well will be to define a user experience that's differentiated. We've talked about services, and in a lot of ways, even though the business is now getting quite big, Apple has a lot of things I think they can still do. So, for example, they're doing more in the health and fitness realms, and I think there could be services they add there. So I see a lot of opportunity there. The key remains investing aggressively, innovating, and executing on their product cycles.
All right, we're going to leave it there. Hey, Daniel, thank you so much. Daniel Flax over at Neuberger Berman joining us there with the latest on Apple. And folks, I'm just looking at the stocks in the after hours. Let's just recap for everybody. We've got Apple down about 1% in the after hours. We've got Intel up about 4%, Amazon down about 19%, Pinterest up 11%. I mean, mixed bag, but these are some big names, especially when you think about Amazon. That sell-off that we're seeing, Taylor, is pretty dramatic.
And the lack of sell-off, you could argue, within Apple. And, you know, Romain, for me, it comes down to use of cash. The ability of this company to churn in massive free cash flow. Their priority and their goal to be cash neutral in terms of all the cash that they get. They, you know, pay down some of the debt and engage in share buybacks. And that just highlights the health of this company.
Absolutely, a financially stable company as it has been for quite some time. And obviously, we just heard him talking about this idea of sort of that ecosystem and how powerful it is. But there is a long-term growth story. And Tim, I thought your point was very salient here about that China risk. And not just the idea that, okay, maybe they need to diversify, but is there risk of retaliation, risk of Apple really being caught in the middle of whatever's going on right now between Xi and the rest of the world?
All right, just an indication, NASDAQ E-mini futures, they're down more than 3% in the after hours. So we're going to see, certainly, Tim, how all of this plays out tomorrow. That is a wrap. Our cross-platform coverage, so many earnings. We'll see you tomorrow.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Hey, it's Bloomberg Business Week. It's Carol Massar, Tim Stenovic. Wow.
Yeah.
Do we get a break?
It's pretty impressive, right? But these are, I am like looking at the aftermarkets.
Yeah.
And like I said, NASDAQ E-mini futures, if you think about something like an Amazon, it is about 6.6% of that index. So it's down 3%. So I'm just curious to see once we get through the overnight whether or not we'll see a bunch of selling tomorrow.
And once we get through the calls, too, if we get more insight, I mean, you have to take these moves with a grain of salt, but 20% with any company, and no matter when that happens, is huge, Carol. I think that's a huge part of tomorrow's trade. Anything that Amazon says about the economy, because it's the fourth quarter guidance that really has investors concerned.
Yeah.
So that means
miss.
Amazon thinks that, hey, the consumer's not as strong as even analysts had thought going into this.
Well, and we heard from Crawford saying, yep, some of it is what's going on in the macro environment. All right, so that's just what it is. Some of it is company specific. And Amazon, we knew going into this, a lot of it was about cutting costs, and that's what they're doing. But nonetheless, that's a pretty big haircut.
Company specific, but we're not seeing it with Apple.
No, but yeah, which is
company specific, and Apple serves a different consumer.
Exactly. I think that's fair. And I think going to what they had to say about their installed base, I talk about it all the time. We are an Apple family. So when we go to buy products, whether it's a laptop, a phone, or something, we lean heavily into Apple. It's a sticky environment. Their active installed base of devices reaching an all-time high. You can leverage that, and they do.
That ecosystem is sticky. Switching costs are high. We're going to continue to dig into
their fourth quarter revenue
numbers.
was $90.15 billion. That's above the estimate.
It's a lot of money, and it beat on many parts. We didn't even get to talk about Macs, which it beat by $2 billion.
$42 billion of
we're talking
iPhone
about.
sales.
Yeah, there's a lot to dig into.
Yeah.
We're going to do that, and we're also going to bring you the latest when it comes to world and national news. Nancy Lyons standing by in our 91.1 studio. Hey, Nance.
Thanks, Tim. President Biden is honing in on an economic message as his final pitch to midterm voters. He's speaking in Syracuse right now, touting a big investment from Micron Technologies. And he'll be in Philadelphia tomorrow to try to shore up a tough Senate race for John Fetterman. Greg Valliere at AGF Investments says the political ground has shifted for Democrats.
Polls show that crime has surged as a big issue. Polls show that abortion is not as big an issue as we thought it might be. Polls also show Hispanic voters are moving to the Republicans.
AGF's Greg Valliere tells Bloomberg he has Democrats losing 17 seats in the House, but he says he may shift that forecast to closer to 20. In this midterm election cycle, Facebook and Instagram are running millions of dollars in partisan ads that look like they come from local media outlets. Bloomberg's Nathan Hager with more from Washington.
A report from the media watchdog NewsGuard calls them pink slime newsrooms. It says both left and right-leaning groups rely on the tactic in midterm battleground states, and they've spent close to $4 million on ads on both Meta platforms so far this year. The report says the advertisements have been featured more than 115 million times. NewsGuard calls it a new kind of political dark money. In Washington, I'm Nathan Hager, Bloomberg Radio.
Americans expect to spend more money on Christmas gifts this year. Those surveyed in a new poll from Gallup anticipate they'll shell out $932, marking a nearly $100 increase from last year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Really appreciate it. Tim Stenavec and Carol Massa were live in the Bloomberg Interactive Brokers studio, continuing to dig through everything happening after hours among the busiest days of the quarter. For an update on the way stocks are moving, let's head on over to Charlie Pellet.
Thank you very much, Tim Stenavec. We recap, we reset. Apple reporting lighter iPhone and services revenue than analysts had hoped for last quarter, raising concerns about two areas that were expected to be highlights. Apple shares after hours, they have gone from lower to now virtually unchanged. Amazon down about 20% in extended trading. Amazon.com projected sluggish sales for the holiday quarter as the e-commerce giant contends with slowing growth and consumers cutting their spending in the face of economic uncertainty. Poonam Goyal is a senior retail analyst with Bloomberg Intelligence.
It's actually pretty bad across the board. It's hard to find something good in this press release. Sales were weak across the board. Guidance is weak. Margins are weak. I mean, overall, the bright star here that used to be AWS is also weaker, both on sales and margin.
AWS, of course, Amazon Web Services. Intel, the largest American chip maker, gave a quarterly revenue forecast that widely missed analyst estimates. Shares after hours, though, Intel higher. Crawford Del Pret is president of IDC.
Intel has been on the front lines, if you will, of the weakening of demand. And I think that so much of the bad news has been out there and has been getting out there, and people have kind of braced themselves for it. So I think that is what you're seeing is some relief.
After hours, Pinterest shares surging roughly 17% higher on Pinterest. The Dow higher today, up 0.6%. S&P down 0.6%. Nasdaq down 1.6%. 10-year yield 3.92%. The 2-year 4.28% right now. Spot gold down 0.2%. 16.61 the ounce. West Texas Intermediate crude up 0.8%. 88.62 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And continuing to watch Amazon down about 18% here in the after hours, dragging down the NASDAQ 100 E-mini futures as well, which is down about 3%. All right, I don't know about all of you, but man, I'm done. Big news flow as Charlie breaking down the earnings we just did with our TV colleagues, and I am ready for a nice night out at a restaurant. I'm just going to say.
I am too. I'm trying to tie this to Amazon earnings in some way, and I think I got a way to do it. I got a way to do it.
Oh, do you?
I do.
Okay,
We've got standing by with us Will Gadara, founder of Hospitality Company. Thank you. Also the author of the new book, Unreasonable Hospitality, The Remarkable Power of Giving People More Than They Expect. People who live in the New York City area or follow restaurants closely also know him as the former co-owner of 11 Madison Park and of The Nomad, and the co-founder of the Welcome Conference. It's an annual hospitality symposium. Will joins us on Zoom from New York. Will, how are you?
I'm doing really well, guys. Thank you for having me.
Well, the way I'm going to connect this to Amazon is years ago when Jeff Bezos was mastering delivering products to consumers, he tended to over-deliver. Under-promise. What am I saying, Carol?
Over-promise and
under-deliver.
Over-promise and
Under-promise and over-deliver.
He made consumers happy. Essentially what he said is
other way.
nobody ever complained when they got a package early. So he'd say, you expect something in 3 to 5 days and it would show up in 2 days. Your book has the subtitle, The Remarkable Power of Giving People More Than They Expect, which Amazon certainly has done and it needs to continue to do if it wants to get back from this. How has that played out in your career, Will?
Well, and I actually have a different way to equate it to Amazon, if I may, because the book Unreasonable Hospitality, what the thesis of it is that the U.S. was a manufacturing economy. We're now a service economy, and dramatically so. And I believe we're on the precipice of becoming a hospitality economy. Because when I look at what people missed the most over the course of the pandemic, it was connection. And as we go into the uncertain financial times ahead, I think when people tighten their purse strings, the things that they will choose to spend their money on are those that bring a sense of connection. Jeff Bezos was unreasonable in pursuit of building Amazon, right? I mean, what he did to bring that company to life, it required profound relentlessness. This book is my step-by-step guide on how to be just as unreasonable, but not in pursuit of product, in pursuit of people.
Well, can we talk unreasonable, Will? Because when you think about hospitality, you think about sledding in Central Park or filling a private dining room with sand. Tell us about that. I have yet to have that experience.
That hasn't happened to you, Carol?
No, that sounds pretty super, but tell me about that.
Well, so that was our endeavoring to be unreasonable with hospitality. We were a fine dining restaurant, right? We were unreasonable in pursuit of the food we served. But if we could take hospitality up to that same notch, it would be pretty incredible. And so we started a program. It was called the Dreamweaver program, where anytime we overheard something at a table, we tried to grab onto that and turn it into an extraordinary experience. The ones you're referencing are, one time we overheard a table of 4 talking about how their kids were seeing it snow for the first time. They were in New York on vacation from Spain. And so the Dreamweavers found a store still open selling sleds at 8 o'clock on a Friday night. And when they left, there was an SUV outside with the sleds in the back to take them to Central Park.
That's Great Town.
I'll give you one more. A couple came and consoled themselves because they had a beach vacation and their flight was canceled. And so we heard them talk about that when they made the reservation. And so we turned our private dining room into their own beach. We put a bunch of sand on the ground, a little kiddie pool filled with water they could, rest their toes into while they drowned their sorrows over tropical Mai Tais. We did all of that because here's the deal. People are more inclined to collect experiences than things these days. But I believe that an experience is not worth collecting unless you give people a story that helps them relive that experience over and over again.
Hey,
you know,
Will-
the other,
go
sorry,
ahead.
go ahead.
Well, I just
No,
wanna-
I was going to say
yeah.
the other thing that like I think about when you guys were talking about Amazon and Apple, honestly, is Amazon, with their focus on efficiency, with giving things to people quickly, that efficiency has come at the expense of relationship. It's been part of the digital transformation, where I think people right now are actually even fine waiting a little bit longer if they feel some sort of emotional connection to the brand that they're being served by. I think that is the stickiness, right? There's a stickiness with Apple because people like the way the product makes them feel, but there's nothing that can make people feel good in a more profound way than hospitality. So this book is me saying to every business out there, you can make the choice to be in the hospitality industry. And the book is where I kind of explain how to do that.
Well, Will, late in the book, when you're talking about leadership, and there are a lot of leadership lessons in here, you write about one of the biggest mistakes that you made of your career, and you use that as sort of a story to talk about how leaders need to say they're sorry. Share that with us.
Yeah, so, you know, one of the struggles I have as a leader is the balance between control and trust. I am a perfectionist. You don't accomplish what we did without having a pretty resounding excellence reflex. And when you're a perfectionist, you try to control as many details as possible. But trust is where hospitality comes in, where you empower your team to bring their most fully realized selves to the table. And we started a new menu, and it was like really digging into the history of New York and the culture of the city. And I wanted every course to be explained in just the way that I wanted the guests to hear about them. And I ended up giving the team like a script to follow. And the result was a completely inauthentic experience where the servers, instead of becoming hospitality professionals, they were actors. And we got ripped in our first review, where, I mean, the New York Times said it was, the meal was like a Seder hosted by Presbyterians. And this is where you were going, is too many leaders try to pretend that they didn't make a mistake in hopes that the world will forget that they made one. Whereas the best form of leadership is to stand up in front of your table when you led them astray and to apologize for your missteps. Because the best way to run a great organization is to normalize a culture of feedback. And the best way to get people to be inclined to receive criticism from you is if you're just as willing to stand up and criticize yourself.
You do say in your book, 30 minutes a day can completely transform your culture, or you at least think about it this way. How so?
Because I think what you talk about ends up very quickly becoming what the team thinks about. In restaurants every day for 30 minutes.
Is it like control the narrative, but in a...
Well, inspire the narrative, I think, is perhaps how I'd articulate it. In restaurants every day, right before we open our door, we have a 30-minute meeting with our team where, and every restaurant does this, but at many, it's when you go over the new dishes, the new glasses of wine, when health insurance enrollment is. I always used it as an opportunity not just to talk about the what, but the why, to share moments of inspiration, to invite the team to do the same, to make it a moment where we focused on why the work we were doing mattered, the impact we could have, and why we should all be proud and encouraged to bring all of ourselves to it. I believe that if every customer service organization, every bank branch, every rental car center, if they just spent 30 minutes or even 15 minutes a day getting their team together and talking about the opportunity they collectively have to make a positive impact on people's lives, customer service as we know it would be revolutionized.
I mean, I would love to. Somebody who spends a lot of time on hold, I think we all are.
Can't talk to a human.
It's very difficult to talk to a human. I mean, do you think the market incentives are aligned for this? Because think about what we just talked about leading into you, what investors focus on, right? Focusing on costs at Amazon. They're focusing on top line growth or what the top line looks like. They're focusing on how many iPhones were sold. I mean, how do you make that, very briefly, Will? Talk about that and like how the market's not aligned necessarily.
Well, I think the market is aligned because at the end of the day, it does come down to numbers. And I believe if you run your business in this way, it translates to the numbers. I mean, listen, I'm sure the two of you have examples of places or times you've been somewhere where they've made you feel so good, and those are the places that you will go to over and over and over again. Does it require incremental additional cost to bring a culture of hospitality to life? 100%. Do I believe, and does my experience prove out the thesis that those costs result in exponentially higher revenue? Yeah, absolutely. And the profits go up dramatically because of that.
Well, and I think that's a great point to end on, right? Because if you do this, right, ultimately you want some payoff, if you will. Hey, Will, we got to run. Good luck with the book. Will Godara, he's founder, hospitality company. Thank you. His book, Unreasonable Hospitality. So be sure to check that out. We do want to do one last quick check on some of the stocks in the after hours because Amazon's still down, off its lows, but still down about 16%. This has to do with a big revenue miss when we talk about what's coming fourth quarter. Their outlook, that's a big miss, so that's some disappointment over there. Company's been trying to cut costs, and it's working on that.
Yeah, Apple too, right now, just down ever so slightly. Shares inching into the green just moments ago. The call starts in just a few minutes, so we'll bring you updates on that on the Bloomberg.
Pinterest, it is up 15% in the after hours. They had a beat for the quarter, and we've got shares of Intel up more than 6%. There was some disappointment, or at least misses, but nonetheless, stock is up.